As everyone has said, it's more than has been accomplished in any administration before, ever, period. This portends very well for what will happen for the rest of the administration. I think this could be the greatest administration since the founding of the country.
Well, we all want to thank you for your help, too. You really have sacrificed a lot. Been treated very unfairly.
Well, they do like to rent my cars, which is not great. You know, it's better.
But you have been treated unfairly. But the vast majority of people in this country really respect and appreciate you. And this whole room can say that very strongly. You've really been a tremendous help. You opened up a lot of eyes as to what could be done. And we just want to thank you very much. And, you know, you're invited to stay as long as you want. At some point, I guess, he wants to get back home to his cars and his... You've done an incredible job. $150 billion. Think of this.
Yeah. It's 160 now.
Yeah, 160. They said, oh, it could have been more. And a lot of stuff is being worked on. That number could be doubled and even tripled. A lot of things are being worked on that we don't count yet because it's not quite there. But you've done a fantastic job, and we appreciate it very much, Elon. You know,
thank you. And it's also an honor to work with your incredible cabinet. I just like to say thank you, everyone. It's great to work with you.
Thank you very much. Thank you.
Mr. President, congratulations on this truly historic first 100 days.
Wait, was that it? That was Elon Musk, President Trump, the cabinet. A round of applause. Did we just see the last of Elon Musk in Washington? Let's get back to our panel. Jeannie Shanzano is here and Maura Gillespie. Maura, was that farewell?
I don't think so. I think Elon has enjoyed being part of this too much to just let that be how he goes out. I don't think this is the last we'll see of Elon Musk, but it was interesting that he chose not to elaborate further and take more of the microphone. I also think it's interesting he's standing to the back and he really is giving kudos to the cabinet members and trying to be, I guess, more diplomatic in this way. And I think that's pretty interesting. I don't think it's the end of it, but very interesting, very appreciative and grateful for the opportunities. It seemed to me more humble Elon Musk than I've seen lately.
Yeah. What do you think about that, Jeannie? The president speaks in the past tense about what a great job. Elon was great, he said. We got the big round of applause there. We're making nice with the cabinet. He says he wants to go back to his cars. I don't know about his family, but does it sound like somebody who's going to be spending a lot of time in Washington here? $160 billion is a far cry from $2 trillion in savings.
Yeah, it became a little more realistic over time. I don't know, Joe, are these two-hat thing going to take off now? That seems like a new fashion.
Even his hat has a hat.
His hat has a hat. I love it. I think to Maura's point, I don't think it's the last we see of him in D.C. I mean, one thing we can't forget is he put a team in place. And by all accounts from the White House, that team is going to stay in place, whether Elon Musk is there physically or not. And of course, I think most importantly for Republicans in Congress who dare to, step away from the president's agenda, he still has the money as the wealthiest man maybe ever in the world to primary them. And we've seen that not successfully this last time in Wisconsin. So you add all that up and the billions that he is taking from the government to in terms of the work he is doing for the government, he's very much going to be in our politics, maybe just not in these fascinating cabinet meetings going forward.
They are fascinating, I guess. It's an interesting exercise, Maura, and it directs us. We heard a lot about tax cuts here. We just heard about cost savings by the Doge. We know there's an effort to bring forth some rescissions this week, but Republicans have a lot of work to do on this reconciliation plan. You heard Scott Bessent this week say 4th of July is the new deadline. Speaker Johnson seems to still be hanging on to Memorial Day here, but there are some important meetings going on right now. Not only markups on the committee level, financial services, oversight, transportation infrastructure, and judiciary. Those are the first to go. We also have Mike Johnson sitting down with the SALT Republicans. This is another situation where he needs to thread the needle here, Maura. Can he do it before the 4th of July?
By the 4th of July, I think he has a better chance than if he tries to stick with the May dates. I think that especially members of the New York delegation feel very strongly about SALT, and they have great concerns and warranted concerns about what happens to those programs, especially with people also talking about Medicaid cuts. And I know that's going to be one of the big issues that Chairman Jason Smith and Speaker Johnson are talking to members behind the scenes about and trying to get them on board. There's a lot of conversations that need to happen between now and July 4th. And I do think a lot of assurances need to be given to some members that cuts will be made, that campaign checks will be written, and support needs to be a lock and step team going into this vote.
Where are Democrats, if anywhere, on this, Jeannie? Obviously, the whole point of reconciliation is that Republicans can do this on their own. You don't have to clear the filibuster in the Senate. But the debt ceiling is hanging out there, and a lot of people think Democrats will need to play a role in avoiding a default. Will they?
I think they certainly could ask for things that they want in exchange for their support, things like protection of Medicare, Medicaid, Social Security entitlements. But how do Republicans now, with good faith, give them that? So I'm not sure what kind of role they could offer here. The reality is Republicans own Washington, they own Congress, this is all on them. And you and Maura were just talking about the SALT caucus, we've got the Medicaid defenders, we've got the deficit, there's a whole 5 or 6 groups of Republicans with asks. And they don't seem this time around to be willing to go along, particularly with Mike Johnson on his request to just support this bill to the next step. So I think the next 100 days or till July 4th, if they can do it, are going to be fascinating as we focus on what Republicans are able to do, because still it's hard to find a smart thinking person who could tell you how these numbers add up and they can get everything they're asking for.
I want to ask you about the interview in the Oval Office yesterday. Donald Trump wrapped things on stage in Michigan just in time for the interview with Terry Moran to run on ABC News. They sat down in the Oval right in front of the president's desk, touched on a bunch of issues here, and things just ground to a halt when they got to the case of Mr. Abrego Garcia. This is the man who was wrongfully deported to El Salvador, and there are questions about whether he is in fact a gang member, whether he's a criminal at all. Listen to this back and forth between the president and Terry Moran.
The man that you picked out, he said he wasn't a member of a gang, and then they looked, and on his knuckles he had MS-13.
There's a dispute.
Well, wait a minute. He had MS-13 on his knuckles tattoo.
He had some tattoos that are interpreted that way. But let's move on.
Wait a minute. Hey, Terry.
He did not have the letter MS-13.
It says MS-13.
Yeah, that was Photoshopped. So let me
That was Photoshopped. Terry, you can't do that.
Don't do that, Terry. The thing is, it was, well, I don't know if they use Photoshop, but those numbers, MS-13, if you look at the picture, Jeannie, they kind of put them, I won't try to explain this. A lot of people are wondering why the president actually thought those were actual characters tattooed on his hand. What did you make of his demeanor in this interview, Jeannie, as we just heard J.D. Vance telling reporters the stories that they should cover and the way he handled himself with this reporter?
Yeah, we looked at that picture with some young people, and the idea that any of us older folks could believe that that wasn't Photoshopped, they found very, very comical, whether they were conservative or liberal, because it was so obviously Photoshopped. And I think Donald Trump did what he usually does. In addition to, telling Terry Moran he didn't know who he was, and he's given him such a great opportunity to chat, and boy, Terry, don't do that. He said the quiet part out loud, which is, I can pick up the phone. I can get this guy released. After all, we have given money to El Salvador to hold these people, but I simply don't want to, which means he is in non-compliance with the U.S. Supreme Court decision 9-0.
Maura, I'd love for you to weigh in on this in our remaining couple of moments. Did the president show his cards on this issue here? Forget the way he interacted with Terry Moran, but he did make the point. Yeah, I could pick up the phone and bring him home now. What does that do to the court case?
Unfortunately, Donald Trump's demeanor, sure, that is what it is. It's not necessarily a surprise. But this tripling down and then admitting that he could fix it in a minute if he wanted to really does, kind of hurt the messaging on the success that the Border Patrol and that increased resources to make sure that we keep our borders more safe. And you've seen that in the beginning. You know, his poll numbers on that issue have been high, but this issue particularly, where it goes too far and people are concerned now, where is the line? And if it was done wrong and it was admittedly done wrong, but then you don't correct it, what's to stop that from escalating to American citizens? And again, you can go down that rabbit hole and see where it might lead people to be fearful. And again, it takes away from the message about the successes that the presidency and the Trump White House has had in making our borders more safe and, you know, stopping illegal immigration. So unfortunately, he did some damage last night, whether he thinks so or not, and whether the White House thinks so or not, because they're going to continue to trickle down on this. But he could have implicated himself with the court.
Got a great panel today. Maura Gillespie and Jeannie Shanzano will have a lot more in our second hour here on Balance of Power. Many thanks to you both for the insights already. That cabinet meeting is still going. Look at it. Linda McMahon is just getting to things now, the education secretary. If President Trump starts talking again, maybe we'll bring it back into the White House. So stay with us. You never know what's going to happen around here on Balance of Power, only on Bloomberg.
From the world of politics to the world of business, this is Balance of Power. Washington, D.C.
The economy contracts for the first time in 3 years. Welcome to the Wednesday edition of Balance of Power as President Trump starts his next 100 days with an economic downturn and a new drive to extend the Trump tax cuts. I'm Joe Matthew alongside Kaylee Lines in Washington. Thanks for being with us here on the fastest show in politics. Kaylee, the president is blaming Joe Biden for the data.
Yeah, he says it's still Joe Biden's economy at this point. Joe Biden's stock market as well, even though earlier in the year, mid-February, when we were at record highs in the S&P 500, he was saying that was because of his election victory. So clearly the spin is active today, as the White House also is saying that the surge in imports shows that countries want to sell to the U.S., not necessarily that its buyers panicked about tariffs.
That's right. You know, they're still going around the cabinet room, a cabinet meeting that began in the last hour. We brought you a good chunk of it here on Bloomberg. Might resolve in some Q&A with the president. If that happens, we'll bring you in the room for it. We did hear from Elon Musk. Got a big round of applause, had nice things to say about the cabinet. A lot of past tense references, though, like he is, in fact, winding things down.
Well, remember, end of May is when reportedly he's going to be shifting his focus back to Tesla, and the president even alluded to that he wants to go home to his cars.
That's right.
Specifically.
And family, I'm sure.
Yeah, and of course we've heard from many other cabinet officials as well, including, interestingly, from the Treasury Secretary, Scott Bessent, who talked about IRS revenue being up, an important comment as we consider the X date and how it factors into ongoing reconciliation talks on Capitol Hill.
Big time. As far as that goes, the director of OMB, Russ Vought, saying that things are going well. The president suggesting the same, and it's going to be an interesting slog from here for lawmakers. The Speaker of the House today meeting with SALT Republicans as they try to get on the same page here, Kaylee.
And we will be talking about all of that this hour, but we begin on this GDP day with a look at the markets off the lows, but we're still down, and Charlie Pellet is tracking everything for us from New York. Hey, Charlie.
Hi, thank you very much, Kaylee Lines. I got you covered on a very busy day for markets. Also, earnings news coming up after the close of the bell. A couple of big ones today. We'll be hearing from Microsoft and Meta Platforms. And ahead of those reports, stocks lower across the board right now, as Kaylee said, off session lows, but the S&P still down 46 right now at 55.14, lower by about 0.8%. Dow Industrials down 190, down 0.5%. NASDAQ is now down 222 points, down 1.3%. The NASDAQ 100 index down 1%. Broad-based selling with the Russell 2000 index down 1.2%. And the Bloomberg Mag 7 index ahead of key tech reports, lower now by 2.3%. The 10-year yield 4.16% with a 2-year 3.62%. Gold down $5 the ounce, 33.12, drop there of 0.1%. A big drop for West Texas. Intermediate crude down 3.7%, now with a 58 handle. WTI at 58.14 a barrel. And Bitcoin now down by 0.9%, 94,052 on Bitcoin. Ford CEO says the tariff relief President Trump is extending to automakers is reasonable and the right thing to do. Although he indicated that more is needed to fully address the impact of levies, CEO Jim Farley making the comment in an interview on Fox Business. Automakers lower right now, Ford shares down by 2.3%. Again, recapping, stocks selling off, S&P 500 index down now by 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet, thank you so much. With a look at the market reaction to today's economic data, the inflation gauge the Fed looks at in terms of the PCE price index, but also, of course, that GDP report that was even weaker than expected thanks to a surge in imports, 0.3% decline in the first quarter. But to hear President Trump describe it, he says that's just the hangover or the overhang from President Joe Biden. He actually said at the beginning of his cabinet meeting that's still ongoing at the White House, Joe, that he deserves a pass when it comes to this data.
Overhang, a technical term for economists, I think, right? We will go back into that cabinet meeting if the president starts to take some questions. Now, enter Peter Navarro, of course, economic advisor and tariff evangelist, speaking to reporters in the White House driveway this morning. This was the best negative print for GDP I've ever seen. And that's where we have to start with Michael McKee, Bloomberg International Economics and Policy Correspondent. He's with us in New York as we wait to hear from President Trump. Michael, take us to school here. Peter Navarro talked about an extraordinary surge of imports, the world trying to sell to the U.S. Does that front running of imports guarantee a downturn in the second half of the year. Is there a silver lining here or not?
I wouldn't say there's a silver lining. We don't have any guarantees at all. Matt Miller, our morning anchor here, insulted me today by saying I was sounding like Peter Navarro, because I said if I were the president, I would try to turn the attention away from the negative 0.3 headline GDP number and turn it towards the 2.3% gain in real final private sales to domestic buyers, because what you have there is a sign of what we were really spending, businesses and people, consumers. And that's not a terrible number, but it too, like everything else, was influenced by tariffs. We thought we might get through this quarter without a big tariff data impact, but this whole GDP number is shot through with tariff implications. And so much of it is the effort by companies, especially, to get ahead of tariffs and order things early. We saw this huge jump in imports that probably, I think they said the biggest ever. And then that fed into inventories, and the business spending was up 9.8%, but a lot of that was because they were ordering all this stuff. So it's really hard to say that this is a great report or the best one you've ever seen, but there are political ways maybe to spin it a little better.
Well, and when we're considering the data we still have yet to get this week, Mike, with a payrolls report coming up on Friday for the month of April, and I wonder whether or not we're still counting April as being Biden's economy or Trump's economy now that he's in his second 100 days in office as we speak. How will all of that data collectively factor into a Federal Reserve decision that's coming next week?
It won't. There's no... Today, basically, because the GDP numbers showed a contraction in growth overall and a rise in the quarterly PCE numbers, somebody said this morning, well, this makes the Fed's job harder. And I said, no, it makes it easier, because it just reinforces the idea that they don't want to do anything right now. You've got contradictory numbers or contradictory directions on the Fed's two mandates in that GDP report. And we don't know what's going to go on from here, because remember, this quarter ended in March. And in March, we had the aluminum and steel tariffs, but little else other than the standard Chinese stuff. And so we don't know what the impact is going to be of all the tariffs that got put on, got taken off, et cetera, during the month of April. It certainly has affected consumers' thinking, but has it affected their actions? And that's the question ahead. So we're going to have to be watching all this data very carefully, and the Fed's just going to sit back and do that. You mentioned the jobs report. Tomorrow, we get the ISM manufacturing report. And while that is considered soft data, it could be very important to the markets, because if we see the same kind of nationwide response that we've seen in some of the regional numbers, we're going to see a big drop in manufacturing activity, new orders, that sort of thing. And that's also not going to play well with Wall Street.
All right, Bloomberg's Mike McKee, our international economics and policy correspondent. Thank you so much, breaking down the data we have in hand and the data still to come. Thank you very much indeed. As we're still keeping an eye on the cabinet room at the White House, we're hearing right now from the Interior Secretary Doug Burgum. The only remaining cabinet secretary left to speak as they go all the way around the table is the Secretary of State, Marco Rubio. And again, when it gets back to President Trump, if he decides to take questions from reporters, we will be bringing that to you. But first, we want to get more insight on where the economy is right now and whether or not the president deserves credit or blame for that, and turn to Douglas Holt-Eakin. He's president of the American Action Forum and former director of the Congressional Budget Office. There's a lot Congress-wise we want to talk to you about, Douglas, but if we could first begin with the deterioration we've seen in GDP, the suggestion from the president that it's Joe Biden who shoulders the blame for this. Does that excuse work today? And if it does, how much longer will it?
Well, if it works today, it's not going to work beginning tomorrow. I'd say this is really the end of the period when you could point backwards on the data. The president can't be responsible for the January data, but the quarter as a whole, it really is in the Trump administration. It's a noticeable weakening in the economy. I think if you toss out all the the trade-related factors that Mike McKee went through, you've got an underlying growth rate of something like 1.5, down from 2.5 in the fourth quarter, 2.4. That's troubling because it's when we turn the corner into April that we see the impact of Liberation Day and the array of tariffs that went on and off. We'll get our first impact read on that in the official date on Friday, but we saw the ADP employment report today, and that came in very soft, 62,000 jobs. Some weakness in places you wouldn't expect, education and health. So I think Friday's jobs report is going to be a very important read on the economy.
It'll tell us a lot more as we hear further references to the R word here, and some suggesting we may already be in a recession. Douglas, it's great to have you back. We heard from Peter Navarro this morning, as you might have heard me mention. This was the best negative print for GDP I've ever seen. You feel that way too?
Well, you know, every now and then I yell at the TV. No, I don't feel that way at all. You know, this was a bad report. I don't think there's any way you can sugarcoat it. Among the things that were really troubling was the very soft household spending, particularly on goods, durable goods. You would have thought that people, and you know, we heard a lot of anecdotes about this, you would have thought that people would be buying ahead of the tariffs to get those things in their houses before they hit. That's a really weak number, and so I think if you look at that and the fact that outside of what's clearly a tariff-related surge in equipment investment, the core of the economy really didn't look good in the first quarter. And as Mike McKee mentioned, the PCE core price index was up to 3.5%. That's a bad combination. Rising inflation, softening economy. Nobody should think this is a good print.
Well, so then it becomes a question of any kind of correction or what could pull us out from the downward trajectory, Douglas. And the White House would argue, as we heard evidenced in the cabinet meeting earlier, that the tax cuts coming down the pike, the renewal of the 2017 cuts, the others that Trump would like to implement, are going to be somewhat of a solve here. And I wonder, assuming that the president can get everything he wants on tax policy, which still remains a question as Congress works on that, to what extent you do expect it'll be some kind of offsetting factor?
Well, let's think about what's in the bill. I mean, number one, it's an extension of current tax law. I don't think anyone expects the sunset, so we're not going to get any juice out of that. That's just more of the same. There are the business expenses on R&D and equipment investment, interest deductibility. Those are modestly positive, but I don't think they're earth-shaking. And then there are the array of campaign promises: no tax on tips, no tax on overtime, SALT cap, things that the president wants to have at least some modest bow toward to fulfill his campaign promises. Those aren't earth changers either. So, from an economic point of view, the tax bill is not a big boost to growth. I mean, it's something we got in 2017. It's already in the economy. So I think the real issue here is, does the president come to reality on what he's done with the tariff policy? You know, if you think having a sunset and a $425 billion tax increase next year is a bad idea, that's what he did on Liberation Day. And so I think some rethinking of the burden that he has placed on American businesses and consumers is really in order. And it's hitting the small businesses the hardest. They're the ones who are cash constrained. They're the ones who are going to pull back on their CapEx the quickest. And I'm concerned about that outlook.
Yeah, interesting. You know, we could talk about the baseline until we're blue in the face here, Douglas, but are we talking about likely an enormous deficit spend here? We're looking at the potential for Medicaid cuts one day, and Donald Trump last night says, and by the way, he's been consistent on don't touch Medicaid. Yeah. It's been a different conversation on the Hill. Last night he said Republicans will increase Medicaid spending. How are we going to pay for that?
I don't think there's a plan to pay for it. They don't plan to pay for defense spending increases. They don't plan to pay for border spending increases. So I think the best case scenario one could map out would be one where we didn't make the current already bad fiscal outlook worse, but most likely it will be worse. Maybe not dramatically worse, but certainly worse than they inherited. And that means that beginning next year, which is an election year, not much will happen. We have to at some point get serious about the deficit. And there's no seriousness right now, and I don't think that anything in this bill is going to address it at all.
Well, and when we consider the deficit, that's why we keep having to borrow and borrow and borrow, and the Treasury's debt ceiling of how much it can issue goes higher and higher. We heard from the Treasury Secretary that IRS revenue has been up, Douglas, as we await an update from the Treasury on when exactly the X date will be. When are you anticipating it, and how important will that be to the movement of legislation in Congress if it's earlier in the summer than is previously or is currently anticipated?
We've mentioned this before when I was on, and I'm quite worried about the fact that they're counting on the reconciliation bill to raise the debt limit. There's no guarantee those timetables line up. It's going to be hard to get to yes in the House, hard to get to yes in the Senate, and even harder to get the two houses to agree on a single piece of legislation. That might not happen before an August X date, in which case they'll have to break out and do the debt limit by itself. We saw the bond market react on in the week after Liberation Day. We saw the long end of the yield curve go up, and this is not the time to have some sort of misstep in raising the debt limit. They need to do it in a timely fashion, not scare international capital markets, secure the funding future of the Treasury, and that may not be able to happen on the timetable of reconciliation. So there should be a plan B out there somewhere.
Plan B out there. You must get that tinge. Your antennas go up when the X date is approaching here, Douglas. If that has to be handled separately and Republicans make a deal with Democrats, putting your politics hat on for a moment, does that change the nuances of the reconciliation debate, or are these going to be two completely separate exercises? One will involve Democrats, the other will not.
If they have to do the debt limit, they will need Democrats in both the House and the Senate, and that will be expensive. Democrats will want some things that Republicans aren't planning to do in reconciliation. They're going to want an extension of the health insurance tax credits. They're going to want a bigger child credit. They're going to want a lot. And what loses is the fiscal outlook. You get to raise the debt limit and solve the immediate problem, but you make the longer-term problem harder. And I don't know what that does in reconciliation. It may empower them to say, okay, well, we might as well just blow it all out this year. We already spent a lot of money, which is the wrong reaction to have, but we've seen it before. So I think that dynamic's actually a very dangerous one from a fiscal policy point of view.
Well, and when we consider the shape of all of this policy, what role realistically, Douglas, is the parliamentarian going to play? And is there anything you're skeptical about actually getting through that review, knowing that for Republicans to be able to pull this off, they have to use this reconciliation process, and John Thune wants to stick to, or at least was indicating previously, wants to stick to whatever the parliamentarian rules.
Right. Yes, he did say that, and I think that's the right call. It really limits the scope. I mean, we've heard things like putting all of the competition policy in the Department of Justice and getting rid of the FTC. You can't do that in reconciliation. There's a lot of regulatory reform they'd like to do. It seems unlikely to make it through in regulation. Energy policy, you can do clean energy tax credits in or out, but you can't really do big policy making. So I think it would narrow the scope of that one big beautiful bill considerably. And if they want to make those policies real, they're going to have to do some more legislating after the reconciliation bill.
Where are you on the timelines here, Douglas? The Speaker still seems to think Memorial Day is realistic. Scott Bessent is pointing us to the 4th of July. Are either reasonable?
I've been thinking Thanksgiving all along, so I'm skeptical. I mean, my observation is that the House can be done by July 4th, and the Senate can be done by July 4th, but I don't think they can agree by July 4th. They have yet to settle any differences. Wow. As you mentioned at the outset, they haven't even figured out which baseline to use. We got a current policy baseline in the Senate, current law baseline in the House. They were discussing that in December. At some point, someone has to force decisions to be made. That should be the president, in my view, but they haven't. And so they've let this process drift along on two separate tracks for all practical purposes.
Well, and when we consider practicality here, Douglas, we heard the president last night at his rally in Michigan talking about Republicans in Congress, actually, that may need to be voted out because of the way in which they sometimes act against the rest of the party. I think we know the types he's referring to. I'm not sure if Tom Massey and Chip Roy's ears perked up at that. But I do wonder what you expect to see from some of these hardline conservatives who want deep spending cuts, who want to see these offsets and may not be able to see them in the kind of size and scale realistically that they'd hope.
You know, a reconciliation bill is an act of disappointment for everybody. It's not going to have anyone's desired mix. You're always compromising. You're always trying to fit it into the box that you've created from the budgetary point of view. And the reality is failure is not an option. So in the end, after all of the posturing and the speeches, which will take us to Thanksgiving, in my view, they're going to, lock arms and vote yes. And I think that's the outcome that everyone should expect.
Spending time with Douglas Holtz-Eakin of the American Action Forum as we also keep an eye on the White House here. President Trump is holding an extended cabinet meeting here, opening up his next 100 days at the White House, and they've been going around the room. If he takes some questions from reporters, we'll put an ear on what he's saying. Douglas, the next 100 days will be occupied more by Trump tax cuts or tariff talk, because I do feel like we're getting a bit of a transition here in the language that we're hearing from the president.
Well, I think that he's going to try to point to the tax bill as the sort of economic rescue plan.
Yeah.
This week report. I just don't think the substance is as outstanding as the rhetoric is. I mean, to not do it is a disaster. So let's be clear, they have to do the extension, but it's not going to do much beyond, as I said, current policy. So it's not going to do much for the economy. So I think the right thing is to get it done in as quick a fashion as possible, and that would require, I think, a little more leadership out of the White House. Also, feature the deregulation, which all the pieces are in place to do a lot of deregulation, as he did in his first time in office. And so I would feature that, and I would negotiate however many faux trade deals you need to get rid of the reciprocal tariffs. That's just too much and dangerous. And then start thinking hard about what to do with the 10% universal tariff. That to me is the one he has a hard time walking away from. It's his idea. Yeah. He's not going to admit he made a mistake. There's no one to negotiate with. And so, there may be a need for Congress to rescue him from himself and have them take away the authority to do that. I just think if the economy really weakens in the second quarter, you're going to see Congress start to think real hard about doing that.
All right, Douglas, it's always great to spend some time with you. Douglas Holtz-Eakin with his view from the American Action Forum. He's the former director of the CBO and knows what he speaks. I'm Joe Matthew in Washington alongside Kaylee Lyles. We're going to bring you back to the White House right now. President Trump just now resolving this cabinet meeting to take some questions from reporters. This is live on Bloomberg TV and radio.
And you know who else I'll never tell? A judge. Because the conduct of our foreign policy belongs to the President of the United States and the executive branch, not some judge. So we will conduct foreign policy appropriately if we need to, but I'll never discuss it. And no one will ever make us discuss it, because that's how foreign policy works.
Mr. President, yesterday you told ABC News, Mr. President, you told ABC News yesterday that you could get Abrego Garcia back if you wanted to. Do you think President Bukele would turn you down if you made that request?
I really don't know. I know that he's been a great friend of our country. He's gotten a lot less money than this would take from us if we were going to build these jails and do what he's doing. And they run a very professional operation. I don't know. I haven't spoken to him. I really leave that to the lawyers, and I take my advice from Pam and everybody that is very much involved. They know the laws, and we follow the laws exactly.
Mr. President, yeah, the transition, sir. You frequently took credit for the stock market highs. You said it was a reflection of how well you were doing in the polls, and then after you were elected, you said the stock market highs were a reflection of how well the transition's going and the American people's confidence in your incoming administration. Now, the stock market's not doing so well, and you're saying that's the Biden stock market, yet you are the president. Can you explain that?
Yeah, I'm not taking credit or discredit for the stock market. I'm just saying that we inherited a mess, both at the borders. You could look at every single one of the people here, and no matter who it is, they're doing better, and they are far superior to what took place for 4 years before us. When you look at prisoners being allowed to come into our country at will, just at will, people from mental institutions, gang members, drug dealers, when you look at that, what they've done to our country, and also having to do with finance, look at what happened with inflation. We had the worst inflation probably in the history of our country. They say 48 years, but I would say in the history of our country, it ate away at people. And even though you saw a stock market going up somewhat, because in my case, I had the biggest stock market increase, 88% in the last term, in my last term. but I don't view the stock market as the end all. It's an indicator. But what the stock market really tells you, and when you look at the stock market in this case, is it says how bad a situation we inherited. This was a quarter that we looked at today, and we took all of us together. We came in on January 20th. So this is Biden, and you could even say the next quarter is sort of Biden because it doesn't just happen on a daily or an hourly basis. But we're turning it around. It's a big ship to turn around, and we're going to have the greatest country financially in the history of the world, I believe. I think we're going to do things and we had to do it. We reset the table. We were being ripped off by every single country with just about without exception. I'd have to really think hard for who hasn't taken advantage. And I don't even blame those countries. I blame the person that was sitting right here where I am for allowing it to happen, where our country was ripped off on trade, hundreds of billions of dollars. And now we're doing better than we've done in a long time. You know, we were losing $4 to $5 to even $6 billion a day on trade with Biden. And now we have it down to a very manageable number, and the tariffs, for the most part, haven't even kicked in yet. So that's the way. Stock markets, to me, are an indication. But the big indication is what's happening, and the people around the table know what's happening. Yes.
The Ukraine minerals deal is set to be signed in 24 hours or so. Is it true that the Ukraine minerals deal is about to be signed in the next 24 hours or so? There's some reports saying that. And if it's true, has the deal changed at all from the last time we heard about it?
Well, I'll ask Scott to answer the question because he's responsible for it.
Yeah, our side's ready to sign. Ukrainians decided last night to make some last-minute changes. We're sure that they will reconsider that, and we are ready to sign this afternoon if they are.
Can you talk about those last-minute changes? What was removed or put in its place?
Nothing's been removed. It's the same agreement that we agreed to on the weekend. No changes on our side.
Just to put that in perspective, though, when I came here, I said, how much money have we given to Ukraine? The real number is about $350 billion. It's unthinkable. And we had no security. We had no nothing. We were just pouring money there, unsecured money, putting it in banks, and anybody could have taken it out. You know, anybody over there, it was their decision. I've never seen anything like it. Europe, on the other hand, which is obviously that whole situation is much more important to Europe because we have an ocean in between. But Europe gave about $100 billion. It's a lot of money. It's a big sacrifice they made also. But they gave much less than we did. And their money is secured, totally secured, by deposits in banks. The deposits are largely Russian deposits. That's what Europe did. But their money is secured. So they gave $100 billion totally secured. We gave money like it's throwing it out the window. And it was done by Biden. And this is Biden's war. This isn't Trump's war. I'm trying to get out. And more than the money, they're losing about 5,000 young Russian and Ukrainian soldiers a week, mostly. There's some people also being killed in towns where missiles should not have been shot, small cities and towns. But we are trying to save the lives of about 5,000 young, mostly soldiers, that are losing their lives a week. I see satellite photos, probably off one of his satellites, come to think of it. But I see satellite photos every week of fields with arms and heads and legs scattered all over. It's a violent, violent, horrible situation. And more important than the money, I want to save the lives of people from other countries that are dying so stupidly, so needlessly, and they're dying. But I said, what are we doing? How did we get into this war? It would have never happened if I were president. Everybody knows, and it didn't happen for 4 years. Wasn't even thought of. I discussed it with President Putin a lot. Ukraine was the apple of his eye, but there was no way he was going to do anything. Zero chance. And I said, you know, we feel foolish. The Europeans are putting up money. It's totally secure. They get the money back. We're putting up much more money. We have absolutely nothing. And I didn't want to make a complicated deal. I didn't want to make a deal that couldn't be made because Ukraine doesn't have very much money. They're going through a very bad period of time. It's been brutal. But I felt very foolish being a judge. So I said, well, we want something for our efforts beyond what you would think would be acceptable. And we said rare earth. They're very good rare earth. As you know, we're looking for rare earth all the time. Rare earth is called rare for a reason. And they have a lot. And we made a deal where our money is secure, where we can start digging and doing what we have to do. It's also good for them because you'll have an American presence at the site, Chris. And the American presence will, I think, keep a lot of bad actors out of the country, or certainly out of the area where we're doing the digging. So we made a deal, and I assume they're going to honor the deal. And I put Scott in charge, and Scott's done it beautifully, but we haven't really seen the fruits of that deal yet. I suspect we will. I suspect we will.
Mr. President, in progress. You had set a 90-day deadline through an executive order for Secretaries Hegseth and Noem to review whether to recommend to you whether to invoke the Insurrection Act to send troops to the southern border. Is that something you're still considering?
Well, I'm talking to them, and it's not hard and fast, but I'm talking to them, and I will tell you that the border is the most secure it's ever been. We have never had anything like it. And when you said, Christy, before, it's 99.999, and I guess that means one person maybe, or two people. It's actually turned out to be 3 people came across the border versus hundreds of thousands of people under Biden. And we're talking about people coming. Look, people, they have souls, they have hearts. Many of them are good, but we have a country that's under siege. We have a country that really is under, I think it's under attack. In many ways, worse than under attack, because there are no uniforms. You don't know who the attacker is, so you really don't. It's not like you're fighting an army. You're fighting people. You don't even know who they are. But 11,888 murderers, many of them murdered, far more than one person, are roaming. Now, some of them have already been caught. A lot of them have already been caught and taken out. But we're being impeded by judges from doing our job. And hopefully that situation is going to be solved, because I think nobody wants to have murderers and people from jail, and I mean for serious, serious crime. I remember the Biden people used to say, no, these are aliens that came into our country and they don't commit crime. I said, they don't commit crime, they commit worse crime. They make our criminals. Some of these people that they've allowed in through open border policies, the dumbest thing I've ever seen. You can look at some of these people and you say, this is not going to end well. But the people that they've allowed into our country are making our criminals look like the nicest people on earth. I will tell you, these are serious criminals. These are violent criminals. These are people that would kill you and wouldn't lose an ounce of sleep, and they wake up the next morning and they don't even remember it. This is a rough, tough group of people, and we've got to get them out of our country. And the law says, I believe, I hope, and I think Pam will be very successful in proving it, but we've run into, I would call them rogue judges. Somebody could criticize me for that. These are rogue judges. These are radical left, generally radical left, horrible judges. And we didn't lose all of these people. You know, we've lost a lot of people to death and to rape, all sorts of crimes committed by the people that poured into our country. And they came in totally unimpeded. Just come on in. And you see it every night. You'd see thousands and tens of thousands of people pouring into our country. We have no idea who they are. And to this day, we're looking for people. We have no idea. We hear that we have terrorists in our country that are so bad, they couldn't stay in any other country, but we're getting them out. And the group between Pete and Christy and Tom Holman and everybody working together, people that you would least suspect are reporting them, getting it, and the public is reporting them. The public is seeing. The public is calling and they're saying, you know, I live in a house and next to me moved in a group of people and they are very violent, and would go and would find out and would say, yeah, you're right, they were really violent, and we have information on most of them. So I just think it's incredible what's taken place. But we right now have a very, very secure border. Right now we have the most secure border in the history of our country, so I don't think we have to worry about your question too much.
Mr. President, as Prime Minister Canada ran against, not only against the Conservatives, but also against you
Yesterday, yesterday he spoke about American betrayal. Are you interested in rebuilding relations with Canada, and if so, how?
No, well, I think we're going to have a great relationship. He called me up yesterday. He said, "Let's make a deal." You know, he was running for office. They both hated Trump, and it was the one that hated Trump, I think, the least that won. I actually think the conservative hated me much more than the so-called liberal. He's a pretty liberal guy. But no, I spoke to him yesterday. Couldn't have been nicer, and I congratulated him. You know, it was a very mixed signal because it's almost even, which makes it very complicated for the country. It's a pretty tight race, but he's a very nice gentleman, and he's going to come to the White House very shortly, within the next week or less.
Mr. President, when will you speak to President Xi of China?
That'll happen. I mean, look, right now, and I told you before, they're having tremendous difficulty because their factories are not doing business. They made $1 trillion with Biden, $1 trillion, even $1.1 trillion with Biden selling us stuff. Much of it we don't need. You know, somebody said, "Oh, the shelves are going to be open." Well, maybe the children will have 2 dolls instead of 30 dolls. You know, and maybe the 2 dolls will cost a couple of bucks more than they would normally. But we're not talking about something that we have to go out of our way. They have ships that are loaded up with stuff, much of which, not all of it, but much of which we don't need. And we have to make a fair deal. We've been ripped off by every country in the world, but China, I would say, is the leading one, the leading candidate for the chief ripper offer. There has never been a country that's been ripped off more than the United States of America under some of the dumbest leadership, and it usually starts with the president. And you can go back, and I'm not just talking about Biden. It's been the worst. I mean, the trade deficits and everything else, he's been the worst. But he had no idea what he was doing. And I think somebody ought to look at the auto pen to find out who was really running this country, because it wasn't Biden. Because nobody could agree to what he agreed to. I mean, he put our country at risk, at tremendous risk, and fiscal risk, financial risk. So I think we have it very much. I really believe that the next 100 days is going to be even better than this. Look, I read an editorial yesterday from a group that normally wouldn't write a good, that this is the most consequential presidency in history, in the history of our country. This is not a particular group that would write that kind of an editorial, but they see what we're doing and what we had to do. And I believe if this group, not just me, if this group wasn't here, I think our country was going to be in, if it was lucky, just serious trouble, but a lot worse than that. I think our country could have been a total disaster. Bad things were happening with our country, and we've stemmed the tide, we've turned it around, but we're going to really turn it around over the next 3 years, 3.5 years, we're going to turn it around, and then hopefully it'll be in such great shape. That's my goal, to put it in such great condition that it can't be destroyed.
You mentioned this last night in your speech in Macomb, but we're facing an unprecedented situation where there's a lot of abuses of nationwide injunctions, sort of seemingly designed to curtail your power, specifically when it comes to deporting these illegal, violent aliens that came in under the previous administration. Have you spoken to your team about ways to mitigate this and continue to deliver for the American people on that aspect?
There are ways to mitigate it, and there's some very strong ways. There's one way that's been used by 3 very highly respected presidents, but we hope we don't have to go that route. But there is one way that has been used very successfully by 3 presidents, all highly respected, and hopefully we don't have to go that way. But there are ways of mitigating that. I want to thank you all very much. I thought this was an incredible cabinet meeting. I think there's probably has never been a cabinet meeting like this, and you've never seen it on tape, that I can tell you. And I want to just congratulate everybody at the table, but we have a lot of work to do, but we're off to a great start. Thank you very much, everybody.
Do you enjoy, Mr. President, leading the White House back second time?
Thank you,
How's your life?
Thank you, everybody.
I'm working hard. I like my life. I'm working hard, but I like it because we're doing a lot of good for a lot of people. Thank you very much. Thank you. Thank you, everybody. Thank you.
Thank you.
All right, that was about 2 hours in length. President Trump convening a meeting of his cabinet at the White House, seen and heard live here on Bloomberg TV and radio, as he discussed a number of different matters with reporters, specifically on China. When he was asked whether or not he's speaking to Xi, he said it will happen, suggesting perhaps that it hasn't happened yet, noting that China, in his words, is the leading candidate for chief ripper-offer of the United States, even going as far as to suggesting that children may have fewer dolls because of where tariffs are with China at this point. Also interesting to hear the president characterizing his reaction to today's weak GDP data, which initially, at least on True Social, he said was Joe Biden's to blame. He reiterated as much in this cabinet meeting today. He says that he's not taking credit or discredit for what's happening in the stock market, specifically that he thinks is just a mere indication, shows how bad of a situation we inherited, to use his words. But then went as far as to say, Joe, that next quarter, not just the quarter we just experienced, will also show Joe Biden, even though he'll be literally months into his presidency.
We talked to Douglas Holtz-Egan a little while ago, who said, no, this is Trump data. This is the first quarter. And we also know that Joe Biden finished his term with, I believe it was 2.4% growth. So we've seen a real reversal here. Well, we heard from all the cabinet officials, as well as Vice President J.D. Vance earlier, telling reporters about the stories that they should be covering. This administration kind of scolded the media in the room there and referred to most of the presidents in the past as placeholders. It was an interesting conversation as this White House opens the next 100 days, Kaylee.
Yeah, and of course, geopolitics factored in too, after reporting from Bloomberg earlier today that the mineral deal with Ukraine was on the cusp of being signed. The Treasury Secretary Scott Bessent said that the U.S. is ready to sign, could be ready to sign this afternoon, but said last night Ukraine decided to make last-minute changes, that there's been no changes on the U.S. side, but that seems to be perhaps where a hiccup is now. And President Trump, when weighing in on that deal, talked about the importance of having rare earths because they are rare, to use his words, and said that the American presence on the site would be a factor.
Since they call them rare for a reason.
Yeah.
That was an interesting moment with Scott Bessent. He did say that no changes have been made, but he also did not quantify the changes that Ukraine is asking for. And this feels really familiar when it comes to this minerals deal. They just can't seem to come to terms.
Yeah, we're going to get into this with our colleague Dan Flatley in just a moment here, as he covers both Treasury and national security issues for us at Bloomberg. But first, we want to check on these GDP day markets, and Charlie Pellet is tracking them from New York. Hey, Charlie.
Thank you very much, Kaylee and Joe. Indeed, the economic data very much playing into today's move lower for the Dow, the S&P, and NASDAQ. Right to the numbers here. We're well off session lows, but still looking at a 36-point drop on the S&P 500 index, down 0.6%. Dow Jones Industrial Average now down 131 points. The Dow lower by 0.3%. A 1% drop now for the NASDAQ Composite Index. The NASDAQ 100 Index down 0.8%. Broad-based selling with the Russell 2000 Index down by 1%. And the Bloomberg Mag 7 Index ahead of earnings after the bell from Meta and Microsoft. That index right now lower by 2%. Your 10-year 4.16%. The 2-year 3.61%. Gold now down 0.2%. 33.10 the ounce. West Texas Intermediate crude is slumping 3.2%. WTI 58.48 a barrel, and Bitcoin now down 0.7%, 94,163. Briefly, the U.S. economy contracted at the start of the year. Traders do expect the Fed to cut rates to forestall a recession. Balance of Power continues right now. Back we go to Washington. Once again, your hosts Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you very much. Joining us from New York as we're experiencing a busy day here in Washington, having just wrapped a cabinet meeting at the White House that lasted roughly 2 hours, with more expected, as President Trump will be making remarks on investing in America later this afternoon at 4 p.m. Eastern Time. What we don't know whether or not will be happening this afternoon, though, is a signing of the minerals deal that has been in the works for months now, negotiating between the U.S. and Ukraine. We just heard from the Treasury Secretary, Scott Bessent, in that cabinet meeting, suggesting that on the U.S. side, they'd be ready to sign as soon as this afternoon, that the U.S. has made no changes, but that Ukraine, Joe, decided to make some last-minute tweaks as of last night.
Yeah, this is feeling a bit familiar. We all remember when Scott Bessent traveled all the way to Kyiv to sign this same deal, and he came home empty-handed. That set us up for the meltdown in the Oval Office and a meeting with President Zelensky that did not go well. So we thought we were coming back around on this, and it may not be about to happen. Dan Flatley is with us right now at the table, Bloomberg's Treasury reporter, who spent a lot of time in the national security space Dan, we saw the convergence of these two in the cabinet meeting with regard to the minerals deal, which was said to potentially unlock a peace deal in Ukraine. This is feeling familiar. Will this ever be signed?
Yeah, Joe, it's a great question, and what a saga this has been.
Yeah.
But, I think just to take one step back, this deal is very important for Ukraine. This basically, the deal itself, we could talk about the details. We're still getting some reporting on that. But essentially what this is a guarantee, as far as the Trump administration is concerned, that the U.S. will continue to remain involved in Ukraine, will help Ukraine achieve some sort of equitable peace deal with Russia, if that's even possible at this point. But this deal is key. And the stakes are very high for Treasury Secretary Scott Bessent with this deal, because you mentioned his trip to Kyiv earlier this year. That was a pivotal moment for him as the Treasury Secretary. It was something that was a little bit different outside of the normal role of a Treasury Secretary, trying to execute this deal that has huge national security implications, and it didn't happen. It didn't happen at that table with Zelensky, and so here we are today, and it has to happen. It has to happen. Both parties are interested in this deal happening. The Ukrainians are interested in it for all the reasons we just talked about. The U.S. is interested in it, and Treasury Secretary Scott Bessent is interested in it because he's put a lot on the line for this personally. So I think that they will get to sign it at the end of the day, but from all we understand from our reporting, it's looking a little dicey at the moment.
Well, and if Ukraine is interested, if this is actually vital to their interests to sign this deal, they don't seem overly eager to rush to the table to actually use the pen. Dan, what is the holdup for Ukraine? Do we have an understanding of what changes it is they're seeking?
Yeah, it's a great question. I think there's a couple of things going on here. Part of it is a clash of negotiating styles. The U.S. has really come on strong with this deal. And part of that is political, and it has to do with, the support for Ukraine among Trump's base and how all that's playing out. And the Ukrainians have a vested interest in this. The stakes are very high for them, but maybe higher than for anyone else, really, in getting this done. And so they're pushing. They want to get this done, but I think they have some concerns about some of the technical details. And this is a big deal for them, and it's something that Zelensky and his advisors have to sell back home. So they don't want to appear to be giving away their own natural resources, their own sovereign wealth, their own prerogatives to a foreign country, no matter how great an ally it might be or how powerful it is or whatever. So I think that there's a little bit of his negotiating styles. Some of it is just the stakes are so high. But I think the fact that we're here today talking about this is, I don't think anybody would have predicted we would be here a month and a half ago or whenever the Oval Office blow up was. So.
Well, that's a very good point. That also speaks to this idea that even if getting this agreement done is hard, there's also the wider peace agreement the U.S. still wants to see between between Russia and Ukraine, and that is a whole other can of worms we'll have to get into another time. Dan Flatley, who covers the Treasury for us here at Bloomberg, thank you so much for your reporting. As we mentioned, we heard from the Treasury Secretary in the cabinet meeting earlier today, but heard much more from the president himself, Donald Trump, especially in the aftermath of today's weak GDP reading, a decline of 0.3%, thanks in part to a surge in imports as companies tried to front-run the tariffs. And he says it's not him to blame, it's his predecessor, Joe Biden.
That's right. Biden data, Biden markets as well. And the president was actually asked about the stock market today, and he's been kind of changing his thought on this, suggesting he's more concerned about Main Street than Wall Street. It's a very different look than we had in the first Trump administration. He was also asked about empty shelves, Kaylee. Really interesting moment. You're going to hear this played back. This is the way this goes. And that's sometimes why a 2-hour freewheeling ad-libbed interaction with the media can come with some risk. He said maybe the children will have 20 dolls instead of 30 dolls. They have ships loaded up with stuff, much of it we don't need. Put a pin in that for now.
Yeah, as we consider what other shelves other than toys may find themselves emptied if indeed we still have effectively a cutoff of trade between the U.S. and China. So we want to get into all of this now and turn to Betsy Stevenson. She's professor of public policy and economics at the University of Michigan, also a former member of the Council of Economic Advisors during the Obama administration, former chief economist at the Department of Labor as well. Betsy, if we could begin first with the president's characterization today of this data, which is indeed backward looking at the first quarter, is more reflective of Joe Biden's presidency than his, even suggesting that the next quarter may be more reflective of Biden than Trump as well. Is there any way in which that is factually accurate?
No. I mean, what's ridiculous is President Trump tried to take credit for the economy around the time he was elected, that the economy was improving because people are anticipating him. And now he's saying that now that he's actually been president, that it's Biden. Look, we all know what's going on in this data. There's just been a lot of people are just not sure what President Trump's going to do. So let's put aside whether tariffs are a good idea or a bad idea. Nobody actually even really knows what's going to happen. And that is meant that, there's just been a huge run up in inventories, because if you're not sure what's going to happen, one way to get around that is to just make your purchases now, stock up inventories, and then at least you can give yourself some certainty about what your business will look like for the next 3 or 4 months. And so we saw a lot of businesses really go down that path in this quarter, which actually makes this data particularly hard to interpret in terms of where we'll be next quarter. But one thing we can know for sure is this is President Trump's economy.
Well, you probably heard us discussing, Betsy, and maybe you heard Peter Navarro or President Trump talking about the benefits of an import surge. Peter Navarro called it extraordinary and said this was the best negative print for GDP I've ever seen. What will be the fallout of that extraordinary import surge later in the year?
I don't actually know what they mean by that. It seems kind of ironic to me, because I thought the whole idea was to get us to reduce our imports. And there's so much anxiety that we might have to reduce imports that it caused us all to increase our imports. So it will be pretty funny if at the end of 2025, it turns out we've imported more things under President Trump's first year than we had under President Biden's last year. But aside from that, I think there's a lot of confusion when people look at the GDP numbers, because they say, well, the problem is negative because of, we subtract the imports. But remember, we're also adding the imports. So the reason we're subtracting them is we add up all the money that companies spend, and that includes the money they're spending on imports. But because we're not making those in the United States, this is a fair complaint that I think President Trump would agree with. We don't want to count those as part of our economy, because we only want to count the stuff that we're making, we're producing, our goods and services. So we subtract from their spending what they spent on imports. Now, if you want to get a little wonky, it's quite possible that there are some measurement issues, which means we're better at counting the imports that we're subtracting off than counting up all the purchases. And so when we get a revision, it might not be quite as negative, because we might be adding more in on the purchases side than we're subtracting off on the import side. But I think some of this is also what companies are doing is they're prioritizing their spending on imports, which means not spending on stuff we're producing domestically. So there is a trade-off, every dollar you spend on something is a dollar you're not spending on something else. And if you're terrified that imports aren't going to be available to you, so you're spending all your money on that, what aren't you buying?
Well, yeah. Would that include, say, adding salaries, hiring people, Betsy? How quickly could this bleed into the labor market as we look ahead to a jobs report on Friday?
Absolutely, right? If you're out there buying equipment because you're thinking, if I don't get ahead on this equipment, that's going to be a priority to you over, say, replacing a worker who's left, or making sure you keep a worker by giving them a raise. So you can absolutely think that this has a direct impacts on the domestic workforce. Look, the thing we don't know is we don't know what's going to happen with tariffs. So we don't know what these businesses are going to do in the second quarter. Are they going to keep trying? You know, they're sort of. I think we're done trying to accumulate imports. You know, internationally now, right? So now we got to live off our inventories. How quickly do we spend them down? When do they get to go back to importing things at an affordable price? And that'll affect what ends up happening to workers and whether they need to let people go. I think a lot of companies struggled to hire coming out of the pandemic. So we're going to see companies being quite slow to let people go, but they will also be slow to fill empty slots. So that's the path we're currently on. And the question will be whether they get desperate enough that they have to let people go. I'm going to tell you that the warning that President Trump is giving us that we're going to have fewer stuff on our shelves, that's not a good one.
It's not a good one, but it is one that we're going to remember, Betsy. It's great to have you back. Betsy Stevenson, Professor of Public Policy and Economics at the University of Michigan. I'm Joe Matthew in Washington alongside Kaylee Lyons as we drive our way through this Wednesday in the nation's capital. We've heard a lot, Kaylee, from Donald Trump, a 2-hour affair with the cabinet today. This follows a 90-minute speech last night, the rally in Michigan, and he's not done speaking. There's going to be an investment event, 4 p.m. Eastern time, that we'll have eyes and ears on as we approach the late edition of Balance of Power.
Yeah, we're expecting the president's going to be touting investment companies are making in the U.S., something we heard a little bit about in the cabinet meeting as he specifically shouted out TSMC, even though those investments in Arizona actually started under Biden, used money from the CHIPS Act. So we always have to put things in context here, and we'll continue to do that later on in the late edition of Balance of Power. That's coming up at 5 p.m. Eastern Time. In the meantime, Bloomberg Business Week Daily is straight ahead right here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Live on radio, TV, YouTube, Bloomberg Originals. Yes, indeed, this is Bloomberg Business Week Daily on this final trading day of April in 2020.
Can you believe it?
No, we're
All right,
almost...
we're in the second quarter. We are in the midst of the second quarter right now, which does mean we're hearing from a lot of companies,
We're
Carol.
also in the second 100 days.
Is that a thing?
Is that a thing?
I don't think that's a thing.
I don't think it's a thing. But having said that, Tim mentioned earnings. We've got stocks definitely, they're down, but they're off their worst levels of the session. We do have some big earnings after the close, Microsoft and Meta among them. So our focus this hour, we're going to talk about, kind of what's to come, but more importantly, we're going to talk a little bit about the chip sector.
Yeah, Qualcomm is getting ready to report. Super Micro is just slumping, by far the worst performer on a percentage basis in the S&P 500. Also, NVIDIA's Jensen Huang speaks on competition with China.
You know who is Super Micro's biggest customer?
Who?
NVIDIA.
Okay.
No idea. Love that supply function on the Bloomberg. Hey, speaking of the second 100 days, what about the first 100 days of the Trump administration? We're going to talk about that. And then what may be next for Mother Earth? How we're looking at that maybe over the next 100 days, but more like 100 years. Will we, God, should I get dark?
Don't get too dark.
Okay, I'm not going to ask, will we even be here? But
no, come on.
That's
Carol.
dark. I'm not going to go there.
All right, Charlie Pellet is going to save us. He's standing by with an eye on everything happening in markets. Hey there, Charlie.
All right, well, here's what's going on. We have got the Dow, the S&P, NASDAQ. They are all declining right now in the red, with the S&P down 42 points. Off session lows, as Carol mentioned, 55.18, dropped there just about 0.8%. Dow Industrials now lower by 167 points on the Dow, a decline of 0.4%, while NASDAQ is down 200, a drop there of just about 1.1%. The Bloomberg Mag 7 Index down 2.1%, ahead of earnings out of Meta Platforms and Microsoft after the close of trading. Meta right now down 2.7%, Microsoft down 1%. Your 10-year currently yielding 4.16%, with a 2-year 3.60%. Gold down $12 the ounce, 33.05, down 0.4%. And West Texas Intermediate crude down 3.4%, 58.34 a barrel on WTI. Evidence that the world's largest economy is at risk of buckling under the weight of President Trump's trade war whipped up fresh volatility on Wall Street. We'll have a whole lot more on the day's economic data, and there was a lot this morning from our Michael McKee. Keeping an eye on shares of Super Micro. Right now, we are looking at SMCI. That stock is trading lower, putting it mildly. Shares of Super Micro Computer, they are plunging 14.7% after earnings. Also after earnings, Snap Inc., parent of Snapchat, down now by 14.4%. Again, we got you covered on both Meta and Microsoft coming up after the close of trading. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, everybody, you are up to date. Charlie Pellet, thank you so much. All right, everybody, we have it. That is the U.S. economy contracting at the start of the year for the first time since 2022 on a monumental pre-tariffs import surge and more moderate consumer spending. It's the first snapshot of the ripple effects from President Trump's trade policy.
Also out today, U.S. consumer spending jumping in March while a key measure of inflation decelerated. That was a welcome reprieve before tariffs are expected to broadly drive up prices. In a cabinet meeting earlier today, the president, Trump, he delineated between his economy and that of his predecessors.
Core GDP, and this is, you probably saw some numbers today. And I have to start off by saying that's Biden. That's not Trump, because we came in on January. This is quarterly numbers. Let's give us a pass on the first month. We were sort of getting a little bit used to things.
All right, that, of course, was President Trump earlier today with the latest on the U.S. economy and today's batch of U.S. economic data. Back in our studio is Bloomberg TV and Radio International Economics and Policy Correspondent, our own Michael McKee. Mike, want to start with what we got from President Trump, blaming former President Biden for weak economic data that sent stocks stumbling initially. He argued that government data showed increased domestic investment signaled his tariff regime is working. Let me just throw this quote. I have to start off by saying it's Biden, not Trump. He said, let's give us a pass on the first month. We were sort of getting a little bit used to things. Is it fair to judge a president's policies in the first 100 days, especially when it comes to economic performance?
Well, I'll give you two answers. In general,
what do you like?
It's
reporting earnings?
Yeah. In general, it's not really fair to credit a president or blame a president for much of what happens on a short-term basis in the economy because they don't affect it. They do with longer-term legislation. The CHIPS Act that Biden passed will have a longer-term effect kind of thing. Trump's tax cuts in 2017. You can point to things in the economy but just because the office turns over doesn't mean one person is doing it right or doing it wrong. The second answer is this is Donald Trump's economy. And this GDP report is Donald Trump's GDP report. The economy was growing fairly strongly, and what we saw, there are a lot of technical reasons, and you've heard a lot about imports coming in, but all of that was because of him. And that was because of the tariffs that he put on and the threat of tariffs that were coming. Because companies spent a lot of money, business investment up 9.8%, because they're buying stuff in advance because they want to get ahead of the tariffs. All of the stuff that came in imports subtracted 5% from GDP. And if he hadn't put the tariffs on, that wouldn't have happened. So he owns this one, even though he wants a pass.
That said, is in your view, is this a fair measure of the first quarter, given this nuance that we had with an increase in imports?
Well, I mean, you can only have the quarter that you had. I mean, we could try to do a counterfactual, but you just don't know. But the thing about the first quarter is that it's built all around the tariffs. Everything that we had is built around the tariffs and what happened there. So does it mean that the first quarter would have been different? Probably, but it wasn't. So now we go forward to the second quarter based on what we had in the first quarter.
Okay, so if everything got pulled forward as a result of these tariffs, what does that mean for the second quarter?
Well, it's hard to tell. I don't want to be obtuse here, but the problem is the first quarter was based on threats of tariffs and that we hadn't had yet because he hadn't done Liberation Day by the end of the first quarter. Now that he has, what have we done since then? The feeling is that maybe we didn't see as much importing, but what we've seen is a lot of canceled orders. And so we should see a big change in the import-export numbers. We have some indications. Tomorrow we get the ISM manufacturing numbers, and there's an expectation we'll see a big drop in new orders. So businesses cutting back on what they were spending. And there's some indication that consumers have cut back some. We don't know yet. We'll get a better picture of it in a couple of weeks. But ordinarily, you would be looking at what the quarter would be building off of in the last quarter. But the things that moved GDP in this first quarter are probably not the things that are going to move GDP in the second quarter.
So what do we need to know about, you mentioned consumer spending. We got numbers on income and spending, personal income and spending for the month of March. Looks like spending, as Tim mentioned in the lead up to you, that U.S. consumer spending jumped in March. A key measure of inflation decelerated. That sounds kind of good.
Well, there were two inflation measures out today, and people always get confused by it. The PCE numbers that come out with the GDP numbers are quarterly averages. So that was the first quarter, and what we saw in that was a big change in January and February inflation numbers, and maybe that part you give to well, you give the January numbers to, maybe you can give to Joe Biden, but February and March were Trump months. But the March numbers, which came out at 10 a.m., showed flat. We didn't have any inflation in the headline or the core, and it dropped the year-over-year numbers significantly. And that's what the Fed's going to be looking at, is the most recent data. Now, if we see tariff increases go into effect, then we're going to see that reflected in the next month or so in in what these numbers show. And Dana Telsey, from Telsey Advisory, has apparently been putting together a list of products that her company tracks, and a massive number of products have gone up in price in the last few weeks. I don't have exact figures. I didn't leave her little note.
But you would assume you'd start to see that, right?
But that should start to play into overall inflation figures. It'd probably show up a little bit faster in the CPI, but we should see that start to happen. And then the Fed has to figure out, as the economy's slowing more than inflation is rising.
I think politically that's really difficult for the president because he's been talking so much about inflation coming down. He's been talking about a decrease in inflation. He likes to talk about egg prices coming down. He likes to talk about the price of energy. Politically, what do you do in a situation such as this?
If you're the president, well, today, if I were him, I would have focused not on as I said, on the headline number. I would have focused on the real final sales, because that tells you what people actually spent. It was deceptive because of the reason they spent the money, but it comes out as a better number. There isn't much he can do. He's 100 days in, and day after day goes by, the numbers come in badly. He can say, well, it's Biden's fault all he wants, but the average person is going to go to the grocery store and say, well, my prices are up, and who's the president right now? And that's, he's got to own that.
30 seconds, the ADP jobs number, 62,000, 115,000 was expected. Is there anything important there that we need to know? I know we have
only in the sense that it suggests a weakness in job creation, but ADP hasn't been very on point lately. So let's wait and see. We could see a decent number Friday because it was still earlier before tariffs, et cetera.
Yeah.
And 135 is the number that economists surveyed by Bloomberg are expecting as of now.
It's slower, but it's not terrible.
Right, and it's not a contraction either, so.
Yeah.
And the Fed watches the unemployment rate. So watch the unemployment rate. That's what their data point is.
All right, the march towards Friday certainly continues, and we're going to expect, what are we looking for in terms of the unemployment rate? We're looking
no
at
change.
No change.
4.2%.
All right.
If it starts to go up from there, then the markets have a reason to panic. They don't need a reason. They'll just panic anyway.
Well, it's interesting because, well, what do you mean? Wait, so what would be, if a number came in much weaker, would the Fed, like we keep talking about for how long, right, Mike, that the Fed has been focused on the inflation side. But if we start to see a significantly weaker number.
On unemployment.
Yeah.
Then they'll start to try to figure out which one is worse. Which one is farther from where it should be, and try to deal with that.
That is not a good situation.
No, it's a terrible situation. And
that's stagflation.
Yeah, Jay Powell noted that in Chicago the other day, that this is exactly what we don't want to have to deal with.
You mentioned Jay Powell, and once again, it came up with President Trump in Michigan, right, talking about kind of pressure and criticism of Jay Powell. Does Jay Powell just turn a deaf ear and just?
Yeah. I mean,
sticks and stones may hurt, that kind of thing.
The president said he's not going to fire Jay Powell. We know we can't trust the president, but I think there are reasons to believe him in this case. But he's not going to be quiet. He's going to let people know what he thinks.
Okay, Mike, while we have you, something I was thinking about when I heard those comments last night from the president, I was thinking to myself, what happens for the next Fed chair? Because if we know the president wants such a hand in this, and look, this is a year away at this point. May 2026 is when this happens. But given what we know the president wants, is that a credibility question when it comes to the Fed? Because he wants to be in control.
Sure, it is for whoever he would appoint as chair, and so it would behoove the president to not pick a wingnut. To use a technical term, to pick somebody with some credibility on Wall Street. Now, it doesn't mean the Fed, just because if he were to pick a sycophant, it wouldn't necessarily mean the Fed is going to roll over, because there's 6 other people on the board and there are 12 Fed bank presidents, and 12 people vote each time, and so they could easily outvote the chairman if the chairman wanted to do something that they didn't think was right.
Right, and you have to think, if something happens in terms of the Fed independence, that the markets would react pretty severely.
That's why I think even after last night's comments, the markets are kind of just not even taking this seriously at this point. we didn't see a reaction.
Well, I'll tell you the most interesting thing I heard in Washington last week. Was a woman who served on the National Security Council in Trump's first term. And she said, she was asked, what keeps you up at night? And she said, the thing that worries me the most is that the markets have not absorbed the fact that this is not the first administration, that everything is different, that Trump is serious, that this stuff is going to happen. And everybody is still thinking, well, this is just going to go away because that's what happened last time. You know, I don't know whether she's going to be right or wrong, but it is a warning.
Fast forward 4 years, and that will determine whether or not. But I agree with you. Everyone's like, you know how to deal with, you know, kind of the chaotic aspect of it. But it definitely feels different. Mike, thank you so much. Or Michael McKee. Hey, you're up to date on the economy. Just a few things we want to get into the tech space. We see super micro shares are plunging. They gave preliminary results that fell well short of analyst estimates. You've got Taiwan Semiconductor beginning construction on a third chip plant in Arizona. And then there's NVIDIA, the chip company we all focus on. CEO Jensen Huang expects to compete with China for a long time, doesn't think they are far behind the U.S. when it comes to AI. He spoke to Bloomberg's Anne-Marie Hordern and other reporters on the sidelines of an event in D.C. today.
In order to produce $500 billion worth of AI infrastructure requires enormous amounts of investment from a lot of different partners. And so we've brought on shore many partners to help us do that. And we're going to have to build our own factories in order to do that.
What's your message and conversation going to be like today with the president when it comes to tariffs?
I'm going to count on the fact that the administration has a good plan. And from our perspective, we would like to have policies that support and help accelerate the development of artificial intelligence in this new industry.
Do you think they're going to have an edit of the diffusion rule that was under the Biden administration, basically placing all these different countries in different buckets?
Well, I'm not sure what the new diffusion rule is going to be, but whatever it happens to be, it really has to recognize that the world has changed fundamentally since the previous diffusion rule was released. We need to accelerate the diffusion of American AI technology around the world. And so the policies and the encouragement from the administration, it really needs to be behind that.
All right, that, of course, is NVIDIA CEO Jensen Huang. NVIDIA shares, by the way, they're down about 20% year to date. They report on May 28th. They are a top supplier to Supermicro. We mentioned that at the top. Semi, the space as a whole, down about 16% year to date. And don't forget that we're going to get a check on this space when Qualcomm reports after the closing bell. That stock is down, Tim, about 4% year to date.
Hey, with our roundup is Bloomberg Intelligence senior semiconductor analyst Kunjan Sabani from the Bloomberg News Bureau in San Francisco. Kunjan, first up, we just want to start with NVIDIA. I know Supermicro is the big stock moving right now, but Jensen Huang's comments on infrastructure investments in the U.S. What is the reality of NVIDIA's supply chain today and its efforts to do more in the U.S.?
Well, NVIDIA is similar to a lot of its peers and fabless companies are heavily reliant on supply chain outside of the U.S., right? Most of their chips are fabricated or fabbed in TSMC in Taiwan. TSMC is moving into the U.S., and NVIDIA, we expect, is going to be one of the key customers using TSMC's U.S. Manufacturing. So a lot of that will come back. But it's not just the chips, right? A lot of the servers, the systems, that's how NVIDIA sells its GPU today, the supply chain is still heavily concentrated outside of the US. There's a significant portion in Mexico, which is, I guess, good because it's close by, but significantly concentrated in Asia. So it will take a long time to move all of the supply chain back to the US.
Do you envision a day, Kunjan, this is one White House, we know things can swing every 4 years potentially. Are your expectations, whether it's in 5 years, I don't know how long a build out like this would take, or 7 years, that you will see a lot of semiconductor activity, manufacturing, start to finish happening in the United States?
Well, definitely. Even before this administration came in, just over the last 2 years, given what happened in the COVID pandemic and given the risen uncertainty around geopolitics in general, even with the prior administration's focus on China, we have already seen green shoots and starts of manufacturing brought back to the U.S. The new deals from TSMC accelerates that. We have seen some slowdown from Intel because of the company-specific issues. But if you give me 5 to 7 years, I would definitely say we would have more manufacturing than we have today.
What about when it comes to AI? Because Jensen Huang also said he'd like the Trump administration to change regulations for exporting AI tech from the U.S. to the rest of the world so American businesses can better capitalize on the opportunities in the future. So what does that mean? More chip restrictions? How does that play out in your mind?
Yeah, so I think the article there was focusing on specific on the diffusion rule, and as it stands right now from what the previous administration had laid out, and if we assume no changes, right, for NVIDIA, about 60 to 70% of its revenue is sort of safe because it's in the regions which are unrestricted. China, which is about 15%, and we think about 10 to 11% of data center right now, is already from the sanctions that were placed on the H20 and the sanctions that NVIDIA has been placed specifically, it's already sort of cut off, right? So the only concern now is that middle tier, which is the regions where you can still ship, where you can bring up data center, but you need licenses and certification. So that's where the concern is. That's where sort of the pie, which is about 15 to 20% for NVIDIA, is at risk if these rules don't get changed. So I think that's what they might be pushing more for. Remember, in the US, we are capped by regions where we have enough power. So there are a lot of other power beneficiary regions outside of the US where we could move our data centers and operate from.
Hey, Kunjan, as Carol mentioned, NVIDIA, the biggest customer for super microcomputer, shares were down as much as 20% earlier in the session, down about 14% right now. This after the company reported preliminary third quarter results that missed expectations. Interestingly enough, JP Morgan came out and said that they don't think that the magnitude of the revenue miss is representative of any industry-wide demand slowdown. How did you look at this result specifically in the context of the industry? Is it something that the industry needs to be concerned about?
I don't think so. I would in general agree with that point. This seems more of a company-specific issue for them. Again, we only have very limited information, but this suggests more of a timing shift. Basically, what they've said is customers wanting the more latest NVIDIA products. But I don't think this should be a signal that there is any kind of demand slowdown from the overall industry or any kind of a weakness in the AI infrastructure CapEx spending.
Hey, one last question before you go. Before we go, Qualcomm reporting after the closing bell. Is it all about smartphones? What is it? What's the key metric, one or two, that we need to watch out for?
Definitely will be mostly about smartphones. We think the numbers might be safe right now from what we have heard so far from the other companies, especially the first Q China Android numbers, phone sale numbers came in better than feared, so that should help them because that's this is where Qualcomm is really dominant. Some Apple pull-in also could help them, but the story is all going to be about Apple share loss this year, right? We saw the spring launch for the iPhone SE. Apple already started moving it to its internal modem. They'll launch their next fall flagship product where that trend is expected to continue. We don't know how much volume split will be. So that's going to be the key focus, especially when I rank all the different, AI semis, analog semis, and smartphone semis. Current uncertainty around tariff, again, the smartphone market much more susceptible to price increases there, a very consumer-focused market. This is the peer group where I think investors are going to play it really cautiously until they get clear signals that there might be no demand destruction.
All right, gonna leave it there. Great stuff. Kunjan, thank you so much. I know it's another busy day for you, so thanks for carving some time out for us. Kunjan Sobhani, he's Bloomberg Intelligence Senior Semiconductor Analyst, and he's actually going to join us after the closing bell to break down those results as well, so looking forward to that.
Yeah, we are going to be relying on Kunjan and the entire Bloomberg Intelligence team quite a bit this afternoon. In the meantime, let's pull in Charlie Pellet for an update on the market because, Charlie, we're seeing a little buy-in here.
Indeed, we are lower, though, down 0.5% on the S&P 500 index. And to your point, Tim, the S&P had been down as much as 2% after a report showing gross domestic product shrank. However, it cut losses by about half as separate data highlighted a jump in consumer spending, while a key inflation gauge decelerated. Bottom line, we are still in the red, but off session lows. Again, the S&P keeping it all in context, down 0.5%. The Dow lower by 91, down 0.2%. NASDAQ down 147 for the NASDAQ Composite Index, a drop there of 0.9%. And ahead of those big tech earnings, specifically Meta and Microsoft, we've got the Bloomberg Mag 7 index now lower by 1.8%. 10-year at 4.18%, the 2-year 3.62%. Spot gold down $13 the ounce, 33.03, a drop there of 0.4%. West Texas Intermediate crude back with a $58 handle, falling 3.6% today, and Bitcoin down 0.6%, 94,285 now on Bitcoin. Cruise line earnings. Cruise stocks are lower this after Norwegian Cruise Line Holdings broke with its cruise peers by warning that cruise demand, which has long defied worrying travel trends, is beginning to weaken right now. Norwegian lower by 7.9%, Carnival Corp down 2.6%, and Royal Caribbean down by 1.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, Tim Stanovic, live here on Bloomberg Business Week Daily. Well, the president, you know this, right? We've all been talking about it this week, marking 100 days in office. It's a period that has included an avalanche of executive orders that started back on Inauguration Day, his Inauguration Day, letting go of federal workers, hiring some back, scaling back departments, bringing some stuff back, introducing tariffs, then dropping back on some, and just generally taking actions that are potentially reshaping the U.S. government longer term and really how the United States is viewed around the world.
All of it talked about at today's marathon cabinet meeting, I think we could call it, at the White House, including what felt like maybe Elon's farewell.
So, you know, the American people voted for secure borders, safe cities, and sensible spending. And that's what they've gotten. A tremendous amount has been accomplished in the first 100 days. As everyone has said, it's more than has been accomplished in any administration before, ever, period. This portends very well for what will happen for the rest of the administration. I think this could be the greatest administration since the founding of the country.
All right, that, of course, was Elon Musk earlier at the cabinet meeting today in the White House. President Trump, after that, then thanked Elon Musk for his work and said Elon, quote, wants to get back home to his cars. So let's get into it. Break down President Trump in his second term so far, those first 100 days. Bloomberg News national politics reporter Hadriana Lowenkron is in our Washington, D.C. News Bureau. Also with us is Beth Fooey. She's partnered at FGS Global in the company's strategic communications division. She advises clients on messaging and media strategy, which I'm guessing they have a lot of questions at this point. She's here in New York. Hello to both of you. Nice to have you here with Tim and myself. I want to start with you, Hadriana. Is Elon done? What do we know about that? It felt a little jarring.
Well, yes, we had known all along that there was going to be some type of deadline, 130 days, and that was something that we had reporting about from the jump. You know, the president has said we would like to keep him for as long as we can, but we do know that there are some restrictions that do come with being a special government employee, and of course he does have several other businesses, but we are told that his work and his, I guess you could say, legacy, the impact will continue beyond him in the sense that he has a team and that he has been working with different people within the cabinet, and they're hoping to continue with a lot of that cost-cutting work.
Yeah, Beth, come on in here, because we did learn last week, and Tesla shareholders certainly cheered this news, that Elon would be spending more time away from Washington, D.C., but as Hadriana just said, the wheels are in motion when it comes to Doge. How should Americans think about the impact and potential impact moving forward of cutting at the behest of Doge?
Well, I think what you just said is really important, that he is going back to his Tesla world, because shares in Tesla have cratered since Elon Musk has been part of Doge. I think he really has to wonder whether this was worth it for him and frankly, worth it for the president and for the American people. Certainly, there were cuts that were made. I don't disagree that the U.S. government is being remade in a way that probably will never be the same as a result of President Trump's first 100 days, and certainly Elon Musk's efforts at Doge. But the efforts were very scattershot. They were really sort of throwing a grenade into the government rather than surgically cutting and finding the actual evidence of waste and attacking that specifically. He just sort of went after different departments, different agencies, willy-nilly. A lot of lawsuits have resulted, a lot of lawsuits that will and have been successful against some of these cuts. We may even find that DOGE is saving no money because there is so much cost to reappointing employees who've unfairly lost their jobs and that the courts have allowed to come back. So it's very unclear that what Elon Musk set out to do and what President Trump asked him to do is actually going to bear the kind of economic windfall that had been predicted. Meanwhile, Elon Musk's own businesses have been really tanking, and he is essentially going back to save them.
You know, Beth, I wonder what's more important, determining whether or not he has had, the president that is, successes or failures in the first 100 days, or whether or not we look at the first 100 days as an indicator of what's to come in the next 3.5 or more than 3.5 years of what's left in the Trump White House.
Well, look, most of the success of a presidential administration really is in the early part of the administration, when the president typically has the highest job approval. Congress is more than willing, especially a Congress like this, a fully Republican, the president's own party, willing to let the president's agenda take precedence. It typically slows down after the early days of the first part of the administration. President Trump, as we've all discussed, has done more than probably any other president in 100 days to make his mark. The question is, how long is that going to last? Much of it's being challenged in court. We've seen poll after poll after poll showing President Trump is losing popularity quickly, that many of the things that he has undertaken in this first 100 days have been met by skepticism and frankly, fear by a lot of Americans. So it's unclear whether he's going to be able to keep this up for much longer.
Oh, that's a really good point. We talked a little bit about political capital earlier this week with Jordan Fabian. About what the president has that he can spend when it comes to Congress. Hadriana, come back in here and just give us, as we do reflect on these first 100 days, give us what you see as some of the successes, some of the wins, but also areas where the president really has not succeeded, some of those losses in the first 100 days.
Absolutely. And as someone, I mean, I covered him very closely on the campaign trail, and I think that there are some things that he said he would do that he has headed in that direction of. The border is the first thing that comes to mind, and that was something where even when I was talking to people and voters, it was often ranked above the economy for them, whether they were in Iowa or they were in Phoenix. And so this was something where we can see the border crossings have gone down. On the deportation front, those numbers appeared to have also gone down. And so, has he hit the millions and millions of numbers that he's touted? That has not yet happened. Administration has pointed to the border crossings as an area of success. And then, as we all know, the tariffs. Tariffs were something that he has said he would do on the campaign trail. And he has done them in a sense that, he has put in some of those tariffs and he's flip-flopped and taken some back. He's offered pauses for some exemptions, and really that's offered a lot of confusion for the markets, as we all know. And more importantly, then the question is, what does that mean going forward? Does that suggest to other industries that they can come in and have meetings and then they can get some of the same reductions that people just recently in the auto industry received? And that was announced yesterday. So we're still navigating exactly what that tariff policy will look like. And that's something, whereas we saw in the latest economic data, that has not worked out well for him. And he has now claimed that to be Biden's fault as opposed to his own. And we had actually done reporting from the jump on the different economic messaging coming from the admin. At what point can he say that the economy was truly his versus his predecessor? And it has seemed that when the data is good, he says it's his. When it's bad, he blames his predecessor.
It's something we just talked about with our own Mike McKee and companies, ordering ahead of expected tariffs. That, as Mike said, that ultimately is President Trump's economy, that buying ahead in anticipation of higher costs. Beth, when you advise your firm's clients on policy and messaging around White House moves and actions, I am curious what's top of mind, and is there an expectation that things will settle down in a bit, or not necessarily?
Sure. Well, we advise a lot of different types of clients, and of course, many of them are concerned about the impact of tariffs on their consumers, on their customers. The issue of DEI, of course, is a major factor for a lot of companies in the United States. There was an effort to really push DEI and embrace the ethos of diversity, equity, and inclusion just in the last few years. That, of course, has changed under the Trump administration, and many companies are trying to figure out how to embrace the value that they place on diversity while not sort of advertising that this is something that's important to them as a company for fear of retribution from the administration. There's a lot of fear out there generally, I would say. It's a very different atmosphere than we've seen under other presidencies, where you might like the president or not, or approve of his policies or not. The sense of fear of not knowing what's coming and trying to prepare but not ever 100% sure of what you're preparing for leaves a lot of consumers, a lot of companies off balance.
Hey, Adriana, on that, just advise us a little bit about what you've been reporting on at the White House. To Beth's point about the way, and I think a lot of people would say we kind of see that on display when it comes to cabinet meetings, when we see really the way that these cabinet officials talk so much about the serving at the pleasure of the president.
I mean, it was very complimentary, I would say, just listening to the past marathon of a cabinet meeting, and they definitely are seeking his approval, and, you know, he has been complimentary toward them as well, shouting out a couple of people, and, you know, even someone who not in the room, Tom Homan, the kind of appointed border czar, was someone who, you know, the president has given praise toward. And so, yes, we are seeing that, and you know, a lot of the reporting that I've done has also looked at the different people in industry and those who have been, you know, victims of some of the work that has been done, and you can see that as well.
Forgive. We would love to have more time. Hey, Adriana, thank you so much, and of course, Beth Fooey at FGS Global. Our appreciation.
6:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got 1 hour, 20 minutes to go until we wrap up the trading month of April. It'll be on to May, and we are looking at a down day right now for the Dow, the S&P, and NASDAQ. Corporate earnings and forecasts are mixed. A lot of economic news to digest, but bottom line here, we are off session lows. Right to the numbers with the S&P down 47, drop there of 0.8%. The S&P now at 55.13. The Dow down 224, down 0.5%. Tech particularly hard hit ahead of earnings after the bell out of Meta and Microsoft. Right now we've got NASDAQ down 1.2%, with the NASDAQ 100 index down 0.9%. The Bloomberg Mag 7 index lower by 2.2%. The 10-year 4.17%. The 2-year 3.61%. Spot gold is down $16 the ounce to $33.01, a decline of 0.5%. And West Texas Intermediate crude now down 3.6%, 58.22 a barrel on WTI. Ford CEO says the tariff relief President Trump extended to automakers is, quote, reasonable and the right thing to do, while indicating more is needed to fully address the impact of his levies. CEO Jim Farley made the comment in an interview with Fox Business. Right now, the automakers all lower. Ford down 2.4%, GM down 4.2%, Stellantis down 4%, and Tesla down 4.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Well, we're going to continue our coverage of President Trump's second term so far. One notable impact is on energy policy. His desire to, quote, drill, baby, drill, and amp up fossil fuel exploration in the United States. That we have certainly seen, along with rolling back support for clean energy initiatives and programs and climate change. And our next guest is a former administrator of the EPA, the Environmental Protection Agency. She was quoted in the New York Times saying, quote, this is worse than any previous administration, and that President Trump, quote, can do a lot of damage to the agency. When he leaves, he will have left devastation in his wake.
We've got back with us Gina McCarthy. She's a former EPA administrator in the U.S. and the first White House National Climate Advisor. She's also managing co-chair of America is All In Coalition. This is a group of leaders from all over the U.S. that supports climate action. It is supported by Michael R. Bloomberg and Bloomberg Philanthropies. Gina, also senior advisor at Bloomberg Philanthropies, the philanthropic arm of Bloomberg LP, the parent company of Bloomberg TV and Bloomberg Radio. She joins us from Boston. Gina, good to have you back with us. What specific presidential actions, in your view, would or have already had the biggest impact on our environment?
Well, I think that on the whole, we see this entire administration trying to benefit fossil fuels at the expense of low-cost clean energy. And I think that's the big takeaway. Look, I know that right now the economy is not going great, and it doesn't surprise me given Trump's policies. But from my small perspective, I'm looking at US EPA, and they're dismantling the agency. They're finding a way to get rid of everyone that's ever talked about environmental justice before, the researchers, the scientists. So what we have here is a tremendous challenge ahead to basically make sure that our communities are protected, our economy can continue to thrive, that we have healthy kids living long lives. This is definitely, for me, not just a dismantling of EPA, but it is a potential to dismantle the entire federal government. And so we have to all step up. We have to recognize the challenges of today, and we have to look at how we can stop these rollbacks of rulemakings every single week that we're seeing from this administration that threatens our lives and livelihoods all across the United States and threatens our ability to have allies we can count on internationally.
Gina, remind the world, remind our audience about kind of what the EPA does, and not just for the United States, but on a global scale. Just give us just a quick overview of the things that I think, we just assume things are going to be here. We're going to have clean water, we're going to have electricity, we're going to have highways and all that good stuff. I'm just talking about general of how the U.S. works. But the EPA specifically, what that does for every American citizen, or hopes to do for every American citizen.
Well, EPA does have a very focused mission. It's to protect our health and the environment. That's its mission. Now, I know there are folks like Lee Zeldin, who's running the agency, who wants to shift it to fossil fuels, but that's essentially what it is. And for decades, what it's been focused on is actually looking at how we keep our water clean, how we keep our air clean, how we look internationally at challenges like the ozone layer, at challenges like hydrofluorocarbons, all these challenges, plus climate. These are international efforts that EPA has been participating in for decades. And EPA is really the most well-respected environmental agency. And our sole goal is to protect people, not just in the United States, for sure. That's where our major focus is. But internationally, they understand the global challenges we're facing, and to work hand in hand with communities and countries all across the world so that we can learn how best to keep our mission, which is protecting the health of our communities and restoring and engaging in our environmental efforts so that we have the ability to live long, healthy lives. That's what it does every single day.
Gina, I'm looking at WTI right now, West Texas Intermediate, $58.22 a barrel right now. I'm curious about the view that you have about the market actually pushing back on some of this. If oil prices are too low, perhaps it's not economical for oil companies to indeed drill, baby drill, and follow through on that portion of what President Trump wants to see. How do you view the commodities market and essentially the market as a backstop to this?
Yeah, I think it's really clear, and it should be clear to everybody who looks at this that clean energy is a decided winner here. And the challenge that we face with this administration is that they are looking to roll back all environmental rules. I mean, there's no question about it. That's what they're doing, and they're looking to do it quickly. And why would they want to do that? They'd want to do that for the benefit of fossil fuels. So we are seeing right now that clean energy is the decided winner in the marketplace. And even though this administration is doing its best to tell businesses not to invest in that, businesses are thriving in their investments. Venture capitalists are standing up because they know there's new technologies. And what this administration is trying to do is revive coal, which is a dying industry, and everybody knows about it. So if we step back just a little bit, we would be able to see that we are in a moment of hope and opportunity right now. We have to grab.
And I'm sure, I'm curious, Gina, from your vantage point, what the president wants to do on coal. What are industry folks saying, and what are companies saying? Are they like, okay, we might not say it publicly, but coal makes no sense?
Yeah, I just think, I work with businesses a lot. I work with the investment community a lot. It's all about how we move forward with clean energy. And you're absolutely right. This idea that we're going to revive coal is ludicrous. But it's also very challenging, I think, for the business community to stand up and wave their hand and challenge things directly. But they're not doing that. They don't have to do that. They're going to speak with their investments. They're going to work with local communities and states.
And so none of that has slowed? None of that has slowed since President Trump came into the White House?
There has been some slowdowns in certain areas for sure. But the vast majority of where people are investing in our country and internationally is in clean energy. It is not in coal. I don't know anyone who is looking to revive old coal facilities other than the President of the United States. And it's not going to happen. It is simply not viable. But the exciting thing is lots is happening. So when the federal government really falls asleep, we have lots that we can do at states and local communities. And that's what America is all in is about. It's about making sure that we can work with businesses and universities and others to really step up big time at a moment when our country needs it most.
I think everybody's going to be watching what the states do, certainly, going forward. Gina, thank you so much. Great to be talking with you again. Gina McCarthy, former EP administrator in the U.S., the first White House National Climate Advisor. She's also managing co-chair of America is All In Coalition. It's a group of leaders all over the United States that support climate action. It is supported by Michael R. Bloomberg and Bloomberg Philanthropy. She's also a senior advisor at Bloomberg Philanthropies, which is, of course, the philanthropic arm of Bloomberg LP. All right, folks, do not go anywhere. Check on trading and stocks on the move.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, coming into soon, the last hour of trading on this Wednesday. We've got stocks higher across the board, although the major equity averages, I shouldn't say higher across the board. What I mean is they are definitely off their worst levels of the session. So we've seen a leg up since the beginning of trading, but we're still down about 41 points on the S&P 500, so 0.75 percentage point. Got the NASDAQ 100 down about the same amount in terms of percentages, down 140 points. Dow, we're looking at a loss, Tim, of about 206 points.
Okay. So off our worst levels of the day, off our best levels of the day. And we'll hear from some companies after the bell, including Microsoft and Meta Platforms.
Yeah, so it's going to potentially shape trading in a big way. Let's take a look at some stocks on the move this Wednesday. I'm trying to think what day it is. With us is Bloomberg News cross-asset reporter Isabel Lee back in studio. Let's start with Caterpillar, always an important one to watch.
Definitely. It's a bellwether for the economy, and its uncertainty really has left a lot of investors a little spooked. So shares are edging lower by 1.5%. And it's another company that again presented dual situations. So the first is, if tariffs are enacted and if we do see a recession by the second half of the year, they expect slightly lower sales this year. That guidance came in line with expectations. The second is, without tariffs, the company said the profit will be at the top end of the range, with sales little change. So for the quarter, the company posted earnings that fell short of estimates, though. But again, it's really just this uncertainty.
So this is a thing now,
It's
Carol.
remarkable.
I think so.
Because 2 weeks ago, United did this.
Yeah.
And Carol said, I don't remember the last time anyone has done this. I said, I don't remember when anybody has done this
Gina
before.
Moran Adams, I think, said the same thing, that she and all of her coverage, right? So what's interesting is how diverse those two outcomes are and what it says about the environment we are. We could go this way or this way, and they're very, very different.
But one would think, though, I mean, not investment advice, but at least some guidance is better than no guidance, because that also is becoming a trend.
Very good point. Starbucks. You've got your eye on what's going on with Starbucks, too.
Yeah, so the stock has pared some of those losses, but still edging lower by more than 6%. So I think the word for Starbucks is progress. We have the CEO saying that the coffee chain is making progress, but of course, the flagging sales in the latest quarter is really adding pressure. We have same-store sales declining 1%. That's short of estimates. EPS also missed estimates. So the new-ish CEO, Brian Nichols, said that there's no denying the results were disappointing, but he added that they're making progress under the hood. And if you think about it, like, I didn't even have to read headlines. I do remember some of the changes he made, which is like avoiding long lines, streamlining the menu. He said that because there's so many people ordering online, the people in store are waiting longer. So he's looking to change that too. A little fun fact though, since he took since he assumed the role in September, shares have edged lower, I think, around 16%.
Have you noticed the writing of your name on the mugs, or on the, not on the mugs, but on the paper
Why?
cups? That's what they're doing. They're writing the names instead of printing out the
I
receipts
see.
and
That's
putting them
good
on.
because it used for a while
personal.
to be a sticker. Yes,
Yeah.
I love the writing of the name.
Okay.
Yeah, but now the matcha there is a little pricey, so I only buy on special occasions.
Well, this is what's interesting, right? He talked, I think, about same-store sales numbers, right, being higher, but this is something that is such a great indicator about the consumer if you're going to start cutting back. You know, this is something you could potentially say, well, maybe I don't go in and buy my, cup of Starbucks every day.
That adds up.
It does add up.
Yeah, this is among the company. Like companies, our write-up says that Kraft Heinz, JetBlue, Chipotle have all warned that economic worries are spurring shoppers to pull back a little bit.
Yeah, keeping an eye on this one. Also watching Snap in a big way. What a big move.
A really big move, down by 15%. It was down as much as 16% earlier, if I wasn't mistaken. That's the most since at least August. So the company narrowly beat revenue estimates, but declined to issue a sales forecast. So again, this is the trend. And like many others, it cited really macroeconomic headwinds for its advertising business. And the angst in Wall Street was evident. We have Morgan Stanley saying that the decision to pull the second quarter guidance this early in the economic uncertainty speaks to how the business is likely in worse shape. I thought that was really a strongly worded statement. We have Guggenheim, Raymond James, Citi, also cutting their price target. But to your point, they're not the only one. JetBlue pulled full-year outlook. I think GM withdrew earnings guidance. Porsche said that they're shrinking margin profits. It's really a scary and uncertain time for the companies.
I mean, you do wonder at this, juncture whether or not how much of it is tied to what's come out of the administration, the uncertainty, or whether there are some companies who had issues kind of coming into the new year, and so is it an opportunity for the C-suite to kind of throw it all in, the whole kitchen sink idea. I'm not saying that that's it, but
absolutely. There was one person though in my inbox who said that, why did Snap do that? I mean, people are on their phones now more than ever. I mean, if you can't buy, at least you'd scroll through your phone. But I mean, it's ad business, so maybe it's not working.
I guess the question too is, and we saw this a little bit with Google. We asked a lot about it with Google. We talked about it with Google with Mandeep. Is who pulls back in an environment where belts are tightening? What's the first to go? And could it be this type of advertising? Not necessarily the Google side. Mandeep told us because Google advertising is so effective, but perhaps advertising on other platforms.
It's a $7 stock, and as you said, down about 14%.
It moves a lot with earnings. It moves a lot with earnings.
Right. Stock down almost 30%, though, year to date. Isabel Lee, thank you so much. She is cross-asset reporter at Bloomberg News here in studio. For more conversations like this, listen to our new Stock Movers podcast. Subscribe for 5-minute episodes on the biggest winners and losers in the stock market. You can find Stock Movers on Apple, Spotify, or anywhere you get your podcasts.
Hey, on Bloomberg Business Week Daily, coming up next, we have got a lot of focus on markets, a lot on China. Gina Martin Adams is going to join us. Jennifer Welch from Bloomberg Economics is going to be with us. And Carol, it's Earnings Palooza, too.
Meta, Microsoft, Qualcomm, Robinhood, yes, Cheesecake Factory, all coming your way. If you're watching on TV, the close is next.
is CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. The Supreme Court heard arguments today over whether to allow the nation's first publicly funded religious charter school. It's a case in Oklahoma that's being closely watched, as Jan Crawford reports.
The opponents of this say that they're concerned that some states will just say, well, listen, if we got to open it up to religious schools, that's going to be so complicated, and, we're just not going to have charter schools at all. So there's a real division on what impact it would have, but there's no question that this case will have dramatic implications for future public education across the country if these kind of charter schools can operate.
The economy shrunk in the first quarter, the first drop in 3 years, and the president's senior trade advisor, Peter Navarro, said it's partly due to a surge in imports with so many U.S. businesses ordering items ahead of the tariffs.
When you have more imports than exports, you have a drag downward on the GDP.
President Trump blamed the numbers on the Biden administration. Nicole Killian has reaction from Democrat Chuck Schumer, who had a very different take.
The leader is saying that this is yet another example of, in his view, what he believes are the president's failed policies, and that he should fire his entire economic team. He says that today's numbers show that Donald Trump is running America the same way he ran his businesses, straight into the ground.
Treasury Secretary Scott Bessent says the administration's close to signing a minerals deal with Ukraine if last-minute issues are resolved. CBS's Weijia Jiang.
Ukrainian President Volodymyr Zelensky did post on social media with a few details. He said it would be signed in the next 24 hours. Trump has talked about this potential deal as a way to pay back all of the assistance the U.S. has given Ukraine. Zelensky specifically said that one of the conditions of the deal is that the agreement does not contain any reference to debt obligations. Any assistance provided to Ukraine prior to its signing, the deal is all about new military assistance from the U.S.
There is a dangerous wildfire burning in Israel, and Prime Minister Netanyahu says it could reach Jerusalem. The BBC's Debbie Ross.
The defense minister has declared the situation a national emergency. More than 100 firefighting teams, including army units, have been drafted in to tackle the blazes. International assistance has also been requested.
The fire has shut down the main highway linking Tel Aviv to Jerusalem. Dozens of people have been hospitalized. It's been whipped up by strong winds and hot, dry weather. On Wall Street, the Dow is off 233 points. This is CBS News. A pop star is opening up about his battle with brain cancer. CBS's Deborah Rodriguez has the story.
Michael Bolton tells People magazine he was diagnosed with glioblastoma after he underwent emergency surgery in December of 2023. The 72-year-old says he underwent another surgery the following month and completed radiation and chemo this past October. People says the treatment has impacted his short-term memory, speech, and mobility. Bolton says a scan this month was clear, but he's chosen not to receive a prognosis. He says succumbing to the challenge is not an option. Deborah Rodriguez, CBS News.
In Rockport, Massachusetts, residents are dealing with an invasion of woodpeckers who are targeting side mirrors on vehicles. One resident who's lived there for decades says they've damaged trees in the past, but this is new and weird. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everyone. We are about 55 minutes away from the closing bell on this Wednesday. Stocks definitely off their worst levels of the session. We're still down on the major equity averages, but not as much as we saw kind of right after the open today. S&P still down about 40, and you've got, Tim, the NASDAQ 100, a decline of about 143 points.
Yeah, we're going to be all in on markets with Gina Martin-Adams. She's here in the studio in just a minute. Also, Jennifer Welch of Bloomberg Economics is going to join us to give us everything we need to understand about what's happening between China and the U.S. right now.
It's like one of the most important, if not the most important relationship right now, and how it plays out.
145% tariffs.
Yeah, that's easy. Yeah, no problem with that one. Yeah, exactly. We do know that.
Speaking of that, that'll be a focus when we hear from companies after the bell today. It's an earnings palooza. We got Meta, Microsoft, Qualcomm, Robinhood, and then
Cheesecake Factory.
I just threw that one in there. I threw that one in there because I had to.
Because we just kind of like to say it and eat it and all that good stuff. Our Bloomberg Intelligence team is going to be over all of that. First up, though, let's get a check on your trading day. Let's turn things over once again to Charlie Bell.
All right, I thank you very much. And as Carol Master would say, tick-tock, everybody, because we got just about 54 minutes to go until that closing bell clangs on Wall Street. The Dow, the S&P, NASDAQ, very much in the red right now. And we are just about to wrap up the trading month of April, then on to May. Right now, the S&P is down 40, 55.20 where we stand, down 0.7%. Dow Industrials down 189, decline there of 0.5%. NASDAQ down 168, drop there of just about 1%. We'll have a whole lot more on the markets coming up with our Gina Martin-Adams in just a moment. 10-year, 4.16% with the 2-year currently yielding 3.61%. Spot gold down $12 the ounce, down 0.4%, 33.05. And a big drop today in West Texas Intermediate crude with a $58 handle right now, 58.12. WTI tumbling by 3.8%. So bottom line here, the S&P down 0.7%. That did follow a 2% slide on a report showing gross domestic product shrank. As for the economic backdrop, tariffs and those markets, Anne Maletti is head of equity investments at Allspring Global, and she was a guest this morning on Bloomberg Intelligence.
Look, in the moment, it feels awful and uncomfortable, but history does suggest that equity market returns for those who stay invested and really think about bottom-up fundamentals and companies that really can control their own destiny. Those investors do well over a cycle.
Anne Maletti of Allspring. Super microcomputer shares plunging after giving preliminary results that fell well short of analyst estimates. SMCI on the ticker down now by 14% after earnings. Snap Inc., parent of Snapchat, down now by 14.2%. Big earnings after the close of trading coming up. Meta Platforms, Microsoft will be all over those numbers as they drop. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. We got numbers from Charlie right there. They certainly are worth repeating. The S&P 500 off its best and worst levels of the day, down 0.7%. This is kind of a welcome reprieve before tariffs are expected to broadly drive up prices. What I'm talking about is separate data showing that consumer spending jumped, a key measure inflation decelerated, though we got that report that showed that GDP shrank. To help us make sense of this and the market moves, we got Gina Martin-Adams. She's Chief Equity Strategist at Bloomberg Intelligence. She joins us here in the Bloomberg Interactive Brokers studio. This morning, we got this note. I don't know if you get these, Gina, but Dan Curtis out in London sends these notes to the TV and radio teams with some stats. The S&P 500 as of yesterday climbed for the 6th day. It's up 7.8%. It's the biggest 6-day climb since March of 2022. If the S&P 500 had closed, and look, we don't know what's going to happen, but it looks like it won't hit this, at 56.11.85 or above, it would be the biggest monthly drop erased ever in that period of time. So my question for you is, today notwithstanding, the buying that we've seen in the last 6 sessions, what explains it?
Oh, it's a good question. I mean, I think that some of it is just a natural recovery after extreme oversold levels that we reached in early April. Some of it is, investors a sigh of relief after some risk-off period, reflecting some concerns about whether or not President Trump was going to approach firing the Fed chair, right? We got a little bit of relief out rally after that. Some of it is earnings in the first quarter, at least, appear to not have been as bad as some had anticipated, at least in the market. You've gotten much better than expected first quarter earnings, but not a lot of visibility on the second quarter. And then I'd say some of it is also investors just hopeful that we're going to get some trade resolution. I mean, the natural proclivity of the equity market is to rise. That's something to keep in mind. So the default pace is to go up until it's very obvious that something is wrong, and then it crashes down. It sort of climbs the stairs and goes down on the elevator, basically. So I think that there's a lot of reasons. Definitely, the thing that concerns me the most about this rise is March 2022 was not a great time, unfortunately, right?
Yeah.
And this goes back to something that we've talked about a lot. When stocks are rising very quickly, that's usually a bad sign broadly. That only happens during periods of extreme distress. The slow gains of the last 6 days look okay, but the fact that we've accumulated that much strength in such a short period of time is more evidence that we're really still trying to figure out if we're in a bear trend, if we're going to be able to shake off the bear market, if we're going to fall into recession or not. There's just a tremendous amount of uncertainty out there. And March 2022, of course, I don't need to remind everyone, was the beginning of a pretty awful year. So hopefully that's not what we have in store, but nonetheless, there's a tremendous amount of uncertainty out there. So buckle up.
So time to keep investing overseas?
Yeah.
Moving overseas? Everything overseas?
Yeah, I'll take that cue and run with it, because we did do some more work on valuations again overnight, and published this morning some work on global valuations, where you do still see discounted equities in rest of world, right? The U.S. unfortunately is in this very awkward position where we're still coming off of enormously high valuation multiples. Even though rates are higher, those valuation multiples are built upon a foundation of very robust expectations for continuous U.S. growth. And here we are faced with, maybe we're not going to get that very strong growth going forward. Whereas the rest of the world, equity markets were somewhat depressed in comparison to the U.S. coming into this year. We've started to see some rotation even with that rotation.
Yeah.
The only equity markets of the world that seem expensive are really the U.S., India, and maybe Australia.
Can I ask you something, though? If the United States falls into a recession or something bad, I mean, slowing growth, we've already seen it. I mean, we buy so much stuff from everyone. Is it just the fair assumption that ultimately what these valuations that maybe look attractive overseas will not look so attractive because their businesses and their economies will also fall off?
They will definitely struggle, but I think it's important to keep in mind that over the course of the last 10 years, the U.S. already has been pulling back as the buyer of last resort for the global product, right? This really started with the first Trump administration. For instance, Chinese exports to the United States are half as great as their total export base as they were 10 years ago. So even the Chinese economy is less exposed to the U.S. than it has been in the past. That is the case for a lot of economies around the world. As much as we still import a lot more than we export, there's been this diversification effort underway on account of the first Trump administration, and then especially on account of the pandemic, where global supply chains were diversified somewhat. There's a lot more regionalization happening in global economies where the production is closer to home. It might not be at home, but it's at least closer to home. And that is getting reflected in trade. So there is still definitely exposure, but how much exposure was priced in the equity market is really important to consider. And then also how that exposure has changed over time is important to consider. The other thing that I would say is, coming into a period of economic weakness in the U.S., you always want to focus on beta inside your portfolio. And the U.S. market was the highest beta market coming into 2025. It's still very high beta. So you've got to worry about the risk that you take on in the U.S., which is really unlike pre-pandemic crisis periods where the U.S. was generally lower beta market.
Interesting.
When stocks were rising, it wasn't always the U.S. just dominating the story. That's the kind of environment that we're coming off of. So an environment where the U.S. is declining, it actually hurts the U.S. most relative to other global equity markets in this small point in time.
You told us that we have to watch earnings. You've been saying that for the last couple of weeks. 50 S&P 500 companies are reporting today. 62 are reporting tomorrow. $6.2 trillion in market cap of earnings today. $9.3 trillion tomorrow. Up to now, what's the message that we've gotten?
The message is very mixed. I don't know if I could paint it in a short brush.
Yeah.
First
you could
quarter
use the
message.
word uncertainty, which is what I hear
know.
a
It's
lot.
so
It
not
gives a
fair,
word
but
cloud.
that is the word of the day.
It's the only word we hear.
Or is it earnings and then like throw in something like Google or I don't know, some other names like that makes it different? I don't know.
Yeah. First quarter, better than expected, at least so far.
Okay.
Most of that better than expected is coming on account of healthcare. That's an underreported issue. Yeah. Healthcare was actually much worse in 2024 because of some accounting changes. Growth rates are looking pretty good in 2025. That'll probably continue. Alphabet last week also added the rest of the beat to the index top line, and then we'll see what happens with tech this week. I think it'll be fascinating. The guidance, though, is overwhelmingly the big story of this quarter, in my opinion. We've got record level negative guidance and record level few companies giving us positive guidance, even going back pre-pandemic. So this is worse in terms of guidance.
Wow. Worse than the GFC?
Even 2020. We don't go that far back in our guidance data, so I can't tell you that much. But it's just extraordinary uncertainty on top of expectations were so high coming into this year that it's just really difficult for companies to satisfy those.
I think it's fascinating what you said about how much like the U.S. has been pulling back on not being kind of the consumer of the world, and it's changed a lot in the last decade. So what's the economy that replaces it? Like if it's the Chinese economy, but should we assume that the Chinese market then comes along with it? Because I think most investors would say not so fast, right? So like can we think about that? Like, who is the economy and market that maybe takes over for the US?
I think we should be thinking about a world that's much less globalized and much more regionalized, frankly.
And same thing for investing?
And from an investment standpoint, that creates a lot of complications for the global most multinational countries of the world, or companies of the world. But from just a trade dynamics story, I think what's the big story for me over the last 10 years has been the regionalization of trade, where especially in Asia, you've got what used to be the TPP now operating functionally as a very viable trade, sort of regional trade coalition, if you will, creating economic conditions and changing economic progress in that region, specifically creating a lot of mingling of those economies and codependencies in those economies specifically. Europe has its own. And then we have the US, Mexico, and Canada, which is a different story.
We're going to leave it on that note. Gina, thank you. Gina Martin Adams. This is Bloomberg.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go until we wrap up the trading month of April. It is on to May with the Dow, the S&P, NASDAQ, all in the red but off session lows. Right now, we are looking at a 35-point drop in the S&P 500 index, down 0.6%. Stocks paired earlier losses, even as evidence builds that the U.S. economy is buckling under the weight of President Trump's trade war. The Dow down 154, now down 0.4%. NASDAQ down 159, down 0.9 again. The S&P lower by 0.6%. The Russell 2000 index down by 1%, and the Bloomberg Mag 7 index lower now by 1.7%. The 10-year 4.15%, with the 2-year that's yielding 3.60%. Spot gold down $17 the ounce, 3,300 even on the precious metal, down 0.5%. West Texas Intermediate crude 58.11 a barrel. WTI now down 3.8%, and Bitcoin down 0.9% at 93,992 on Bitcoin. Coming up after the close of trading, we hear from both Microsoft and Meta Platforms, among many other companies. Shweta Kujaria is senior research analyst at Wolfe Research. She told us she is expecting a modest beat out of Meta.
We think that the first quarter numbers for Meta will be just fine. We're in fact expecting a beat, not a meaningful pullback on ad spend. But for the second quarter, we are expecting, now we are also looking at Snapchat's results from last night, and they dropped their guide, or they did not guide for the second quarter. For Meta now, we are expecting for the second quarter to the guidance at the high end to be about 9 to 10% year-over-year growth for advertising revenue.
Shweta Kujaria, senior research analyst at Wolfe Research. She mentions Snap Inc. and shares right now are down by 14.1% ahead of earnings. Meta down 2.4% ahead of earnings. Microsoft down by 0.9%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Do appreciate it. President Xi Jinping's diplomats are fanning out across the world with a clear message for countries cutting deals with Donald Trump. The U.S. is a bully that can't be trusted. Chinese officials are racing to turn foreign governments against the U.S. inside a 90-day window. Trump has granted all nations, except China, to strike trade deals during a tariff reprieve. On tariffs, here's what President Trump said in an interview that aired last night on ABC.
China probably will eat those tariffs, but at 145, they basically can't do much business with the United States. And they were making from us $1 trillion a year. They were ripping us off like nobody's ever ripped us off.
Well, there you have it. President Trump last night, in an interview that I should say aired last night on ABC. Back with us is Jennifer Welch. She's chief geoeconomics analyst for Bloomberg Economics. She joins us from our Washington, D.C. bureau. Once those pacts are in place, Treasury Secretary Scott Bessent has said he wants U.S. allies to, quote, approach China as a group, giving his side more leverage in negotiations. We did speak to you yesterday about who has leverage in those negotiations. How do you look at the reporting from our team that says that Chinese officials are looking to turn foreign governments against the U.S. inside this 90-day window, Jennifer?
Well, good to be back with you. Yes, Beijing launched this effort pretty much right after Liberation Day to take advantage of that moment to try and curry favor with other countries that were facing reciprocal tariffs from the U.S. and begin to build their own coalition against D.C. The challenge they're now facing is that most of those reciprocal tariffs have been put on hold, and many countries are far more focused on negotiating deals with the U.S. and see talking to Beijing as sort of an unnecessary risk that could throw a monkey wrench in those talks with Washington. And so I think we're likely to continue to see Beijing rolling out this charm offensive, but I also think they're unlikely to get a lot of traction, at least as long as countries are focused on those trade talks in this 90-day period.
Well, and it's interesting because what about, you know, there are those countries, Jennifer, right, that rely on Beijing and China for raw materials or critical minerals. So it's a little bit complicated, at least for some.
Absolutely. And there are a number of key U.S. trade partners, particularly Latin America, Southeast Asia, the Middle East, that trade far more with China than they do with the U.S. And I think that's where the sticking point in these conversations that Washington says that they're having with trade partners is going to be. How far does the U.S. want these other countries to go in restricting trade with China? If it's focused on key strategic sectors or sectors that those countries are also worried about protecting from Chinese overcapacity, they might be able to make some traction. But Beijing is threatening retaliation against any economies that work with Washington. So it's a charm offensive, but there's a pretty heavy stick that Beijing's wielding as well.
We got some news during the 2 o'clock hour that the U.S. has been proactively reaching out to China through various channels, seeking to negotiate on tariff issues. This came from a post by a Weibo account that's affiliated with state-run China Central Television. How do you, as an expert on the region, as an expert on the country, how do you look at information like that? Like, how should we take in info like that?
Well, this is very intentionally an effort by Beijing to promote this information, right? That didn't just come out kind of happenstance. They're trying to put out this post to sort of contradict the U.S. narrative that we've heard from the administration over the last few days, which is that President Trump says the two sides are talking, and Beijing has been consistently saying, no, we're not. And I think Beijing's trying to project this aura of strength that they aren't running to the U.S. asking for a deal, but it's the reverse. I think the reality is more complex. These two countries are continuing to have daily diplomatic negotiations and conversations. That's just part of being major players that have to talk to each other on a pretty frequent basis. But whether or not they're actually having what we would consider to be serious trade negotiations that are moving us towards a deal, I think that is less likely at this moment in time, just given how far apart the two sides are and the fact that they can't even seem to agree on whether they're having a conversation.
How much, though, Jennifer, is ultimately saving face, maybe on both sides, for both President Xi and President Trump? And I just wonder how much of this dance is to be expected, but that when all is said and done, they're going to come together? Or is that a bad assumption that they will work out something that isn't so onerous?
No, I think you're right. Saving face is a really key driver and factor at the moment in time. Neither side wants to look weak. Neither side wants to look like they're going to blink. That's why both of them are saying the other is definitely going to be the one to call me. We're in the strong position. And I think the challenge is how long are they going to be able to hold that position before the economic pain of these tariffs really starts to bite in, and someone has to be the first to kind of make the first move to pick up the phone. Realistically, I think what's going to happen is that meetings are going to start at a lower level, at more of a working level, and move their way up to a leader level conversation, which is not how President Trump likes to do business. He wants to deal directly with his counterparts. That also tends to be a little bit of a faster way of kind of shortcutting the bureaucratic process and getting to an outcome. So I think you've combined all these factors, and what that suggests is that this is likely to be a prolonged process, in part because it probably will have to start at the bottom and work its way up.
I want to home in on that pain point a little bit, because we talked a little bit about this yesterday with you, but in terms of the pain that these different economies could feel, it does seem like the Chinese economy is better positioned, at least from a consumer perspective, to experience / withstand pain than perhaps the U.S. economy, the U.S. consumer. Is that fair?
I think certainly politically they have a better sort of hand of cards to deal with, right? Beijing has far superior ability to shape public opinion and public sentiment, or at least the voicing of that, than the United States does. They're also not going to be as responsive or sensitive to the sort of feedback at the ballot box that at least many of President Trump's allies in Congress will be next year with the midterms. But I do think that this is likely to deal quite a bit of economic pain to China, and already some of the factory data that we see from April is indicating reduced factory activity, that these tariffs are starting to have a bite, and that's before really we expect the full impact of the tariffs has come into play. That's probably at least a month or two out, as stockpiles and as all kind of the forward trading that a lot of companies were doing in advance of tariffs begins to really hit. And that, I think, really underscores Beijing's interest in this foreign charm offensive. It is existential for them to prevent other countries from blocking off their markets to Chinese goods, because the loss of the U.S. market is going to be significant pain, but it needs those other markets even more to deal with that pain.
What about potential pain on the U.S. front, and pain in terms of perhaps empty shelves or people not being able to order or get what they want when they're used to it?
No, I think you're exactly right. I think first the line from the administration that these tariffs aren't going to be passed through to U.S. consumers looks extremely unlikely, and some of the initial data is suggesting that's not true. I mean, you look at, for example, Chinese e-commerce giants, and they're quite clearly marking up their prices that U.S. consumers would have to face for those goods. And I think second to your point, there are a lot of goods where the profit margins are so thin that with higher prices coming out of their inputs from China, they're just not going to be able to manufacture them anymore. So good news, bad news story that maybe that won't have as much of an inflationary impact if you're not paying higher prices because you're just not able to buy anything. But obviously for customers and for manufacturers that rely on those inputs, that is very much a bad news story.
I guess, Jennifer, one of the things that I think about a lot is that in the last 30 years, it's been all about U.S. multinationals, just all multinationals, global multinationals around the world, looking to be involved in the Chinese market. So it's interesting to kind of see where we are in a relatively short time frame of such a contentious relationship between U.S. and China. Having said that, I also think about everybody has a price, right? And I wonder these nations that China might be reaching out to, the reporting that we are doing, to the surprise of Indian officials, China showed a market change in approach to a contentious border issue during a meeting last month, according to people familiar. Other signs of a thaw between China and India. Prime Minister Modi plans to go to Beijing this year for the Shanghai Cooperation Organization Conference. China offered to buy more from India to help New Delhi reduce the trade deficit. I do wonder, are there things that China can do that really move the needle when it comes to relationships that exist now and maybe bring China closer to other parts of the world besides the United States?
I think for many countries, they're going to be looking at extracting as much as they can from the U.S. and China and simultaneously shielding themselves as much as they can from retaliation. I think in India's case, for example, after last week's terrorist attack, rising tensions with Pakistan, which is a close ally of Beijing, now if I'm New Delhi, I'm looking to Beijing to say, okay, what are you going to do to rein in your friend over here? And that might be a real test of how far China is willing to go to secure some of these additional friends beyond the United States.
What do you tell folks who say, all right, where are we in a year, in 2 years, when it comes to global trade and in particular the relationship between U.S. and China?
I think the U.S.-China relationship is still likely to be extremely contentious, whether you're looking a year or two from now or whether you're looking 5 years from now. At this point, we're in a structural rivalry, and whether it's President Trump or someone else in the White House, we're likely to see a continuation of these U.S. policies that are taking China on as a strategic rival. And indeed, we saw that continuity from the first President Trump term through the Biden administration and now on to the second Trump administration. I think, though, in terms of the trade relationship, there is a possibility that they'll reach a deal, at least within the next few years. But I think that's going to be very much a long process to get there. And the scope of the deal is really unclear at this point. Is it going to be a phase one redux? Is it going to be a larger structural deal along the lines of what Secretary Bessent and that phase two negotiation that never happened was supposed to achieve? I think the latter is a lot less likely, but maybe something on the former.
Hey, just about 10, 15 seconds. You said it'll be contentious, but will it also be connected, U.S. and China still?
I think these two economies are so interconnected, it's going to be hard to sever all of those links, at least in the short to medium term. But that means that there's a lot more tension that could happen between now and then as both economies try and work towards that de-risking.
All right, great to do a deep dive with you on this, the U.S.-China relationship. Jennifer Welch, she's Chief Geoeconomics Analyst for Bloomberg Economics, joining us from our Washington, D.C. Bureau. Coming up,
we're driving to the close with Brooke May. That's next on Business Week.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got just 20 minutes left in the trading month of April, then on to May with the Dow, the S&P, NASDAQ, all in the red. We are off session lows. Right now, the S&P is down 45. That is a drop of 0.8%. S&P now at 55.16 with the Dow down 217, down 0.5%. NASDAQ Composite Index down by 1%. The Russell 2000 Index down 1.2%. And the Bloomberg Mag 7 Index ahead of earnings from both Meta and Microsoft. That index now down by 1.8%. 10-year 4.15%. The 2-year currently yielding 3.59%. Spot gold down $23 the ounce, down 0.7%. 32.94 on the precious metal. West Texas Intermediate crude down 3.8%. 58.12 a barrel right now. And Bitcoin down 1%. 93,911 on Bitcoin. We'll have a whole lot more on the markets coming up in just a moment with Brooke May of Evans May Wealth. Microsoft Meta Platforms will be reporting results after the close of trading. Meta right now down 2.3%. Microsoft down by 0.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Hey, thanks so much.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody, just about 18 minutes to go until we wrap up the trade on this Wednesday. We got some big earnings coming your way. Meta, Microsoft, Qualcomm. There's a whole big drop. eBay, MetLife, KLA Corp. Sorry, I had to look at my list. Robinhood.
You still haven't said it.
Cheesecake Factory.
Thank you. There
Yeah,
it is.
415. That's coming your way. But really, it's some of the big mega cap tech names that we'll be looking for. Charlie just breaking down the numbers. So we're definitely a lot more bullish than we were at the beginning, but we're still down across the board when it comes to the major equity averages.
Between Tuesday, Wednesday, today, and Thursday, we are hearing from nearly 1/3 of companies in the S&P 500. That would be 156 companies. Today, $6.2 trillion
Can I
in
say,
earnings by
it has
market
just
cap.
been the strangest, I feel like, earnings season. I know we just talked about earnings with Gina Martin Adams, but I feel like we're usually so laser focused. We break them down, but it just feels like everything coming out of Washington in terms of U.S.-China trade, like this will determine so much in terms of the global economy, so much in terms of the U.S. economy and earnings going forward. So I feel like that, to some extent, is really overshadowing the earnings.
Yeah, Gina reminding us that guidance is the big story, a record level of negative guidance and a record few companies giving a positive guidance. Let's see what Brooke May has to say about it. She's managing partner at Evans May Wealth. They've got about $1.3 billion in assets under management. She joins us once again from Indiana. She's back with us. Brooke, I do want to start with the earnings view from you. Again, Gina reminding us that is what to watch. It's been mixed, to say the least. There's a lot of nuance there. How would you characterize or generalize what we've heard from companies thus far?
Mixed. That's probably the best way to describe it. We've seen a broad array of earnings. And to your earlier point, guidance. Guidance is what's moving the market. Look at Snap, for example. Today they're getting penalized because they really weren't able to give guidance. So, as you mentioned, the Mag 7 make up a significant amount of the market cap. And I'm eager to see what Microsoft and Meta have to say today. Earnings expectations, we think Microsoft will be up about 10%. Meta's earnings up about 11%. But again, that guidance is going to be very important.
How many portfolio options are you giving your clients at this point and saying, hey, if the economy goes this way, this is probably how you want to invest. And if we fall into a recession or stagflation, this is how. I'm just curious how you are gaming that out, different scenarios. I know you do probably anyway in terms of risk tolerance, but in this moment in time, how does that kind of factor in?
We're staying mostly invested. We have raised our cash levels somewhat. And we've also made a rotation a few months back into gold as kind of a hedge against more volatility. So we're staying invested, but we're taking more of a cautious approach. We've sold off a few of our names that have higher PEs and are going to be more sensitive to the volatility of a struggling economy. and we've moved into some more defensive names. And so we've been proactive in taking these steps, but really we're trying to err on the side of caution right now.
What are clients asking you when your phone rings, when you look at your inbox? What do they want to know? And I would imagine that this week and last week is less busy than it was at the beginning of the month.
Mm-hmm. Absolutely. They want to know, where are we going next? And, you know, as we all know, the word of the day is uncertainty. And it's very difficult right now to project where the market might end because we don't know what earnings are. And, you know, to forecast where we think the market's going, we look at earnings and we apply a multiple to it. And there we go. We get our year-end price target. So right now it's difficult. We've pulled our year-end price target because there is so much variation in what can happen next. And so we're telling clients, we're setting the expectation, expect volatility, at least for the foreseeable future, the next few months. It takes about 2 to 3 months once tariffs are imposed to actually see them feed through to the economy. And so we don't know what that's going to look like, you know, whether it's going to be inflationary. If so, how bad is it going to get? And so right now we're just setting the expectation, expect volatility. We're going to stay mostly invested. And if you know right now that you're going to need money in the upcoming year, tell us. We'll raise the cash, set it aside. You know, the market's only about 6% off year to date.
Yeah.
So it's not a bad time to play it safe.
Oh, that's interesting to hear. The reason I ask is because about a week ago, no, it wasn't, it was last Friday, Adrienne Yamaki joined us from San Francisco. She's over at Strategic Wealth Capital. And I know this kind of blew you away, Carol. She said, she told us that she actually had clients that were talking about getting out of U.S. assets. And they were really freaked out.
Yeah, she also mentioned somebody who was like looking to move as well. Like, but it was something we really hadn't heard. And I think it's safe to say, Brooke, I get it. We've all been doing this a long time, and you hear, you know, long-term perspective, keep your eye on the ball. What are your long-term objectives? But if things are dramatically changing in terms of, you know, geopolitics, trade, like things could potentially impact U.S. companies in a big way, and that is where a lot of investors have been placing bets because it paid off the last few years, right, or for a long time. So I just do wonder how you start to think about that potentially.
You know, there's a risk to being out of the market. Like we saw a few weeks back, the market can turn on a dime, and it can rally based on a few bits of good news. And you miss that opportunity if you're sitting in cash. And when you look back over the last few years, there's been a lot of potential factors in the market and in the economy that very well could have led to a recession. In fact, there was a lot of banter about the R word and recession coming that never really came to fruition. So we think it's more appropriate to take a defensive stance than it is to reduce our equity exposure in favor of cash or other asset classes, because it can move quickly. You know, look at the pandemic. You know, the market cratered in really just a few weeks' time, and then rallied. And we've made back what was lost in a relatively short period of time. The good thing is U.S. businesses figure out how to make money in all environments. And while it might take a recalibration, you know, a slowing economy and inflation and, you know, additional tariffs, it's definitely going to have an impact. But you don't know at what point things are going to get better. So you do have to stay invested.
Well, okay, so the opposite of that, Brooke, if you raise cash for clients, if they need it in the next year, where do you keep that cash so it does earn something? And how much do you have on the sidelines right now, just in 30 seconds?
Money market. Right now, a lot of the discount brokers, you can get 4 1/4 on the money market. So you're earning something. It's not like it's just sitting in cash. And really, in our portfolios right now, we've got about 5% allocation to cash.
Okay.
So there is some, but it's not double digits.
4%, 4 1/4%, Carol, on the year?
Yeah.
For the year. You know, that's annualized, of course.
I would take that.
Yeah, beats the year to date, I guess, down 5.73% for the S&P 500.
Still, though, if we go take the 2-year, you know.
When in doubt, zoom out. That's what Carol Master does.
Right. That's what you do.
Yeah.
And like, you know, but we shall see. We shall see.
Gina reminding us, upward bias for the equity market.
You know, my husband and I talk about this. It's like, go back 10 years. Where was the market?
Yeah.
Go back 5 years. Where was the market? We got to run. Brooke May, be well, managing partner at Evans May Wealth, about $1.3 billion in assets under management. Counting you down to the close. 10 minutes to go.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio.
All right, everybody, just under 7 minutes to go until we wrap up the trade on this Wednesday. We're seeing some buying into the close. So guess what? We're in the green.
No way.
All right. Is there a headline that crossed?
We are.
We're now up about 0.2% on the S&P 500, a gain of 12 points. Dow Jones Industrial Average now up 0.5%, up 209 points. And the NASDAQ 100 just up a hair, up not quite 0.2%, but up 29 points. Buying here. What is going on?
We're not going to hit the record.
End of the month?
It looks like
end of the month?
Maybe. It looks like we're not going to hit the record. Dan Curtis out with an email early this morning. He's out in London, so it's not early for him.
Yeah.
4 a.m. our time. He sends us some great notes. He says that if the S&P 500 closes above 5611, it will be the biggest monthly drop erased ever. But we're not going to get that.
That would be a lot. Yeah, we'll see. Really fascinating. Keep in mind, Microsoft, one of the few Mag 7 companies, it will be reporting after the close. I'm looking at our Markets Live blog. Microsoft, one of the few Mag 7 that's still trading at an above-average multiple of its inflation-adjusted long-term earnings. Meta is cheap on a long-term basis, according to our live blog. They both report, as we mentioned, after the close, so we'll be watching out for them. This is kind of interesting.
I'm just looking at HCPI on the Bloomberg terminal, seeing how low we were and how high we were. The high for the S&P 500 today has been up 0.2%. We're up a little over 0.1%. The low at the earlier in the session, we were down 2.3%, Carol.
Yeah, kind of interesting. And we had more names lower in the S&P 500. Now we've reversed that. And now we've got 328 names to the upside and about 174 to the downside. So I keep looking at my kind of headline screen to see if there is something. It's not like a huge move.
No, but it's a big reversal.
But if you have charts, right, for a day where we were in the red pretty much all day here.
You going to work from home?
I don't know.
In May?
Probably not.
Why? New Jersey Transit is asking riders to work from home in the event of a potential union strike that threatens to shut down commuter rail service starting as early as May 16th. Is your train?
No, I'm not New Jersey Transit.
You're not?
No.
Really?
No.
PATH?
I don't think so. I think that's like the rail and I don't know if that's...
Port Authority, Trans Hudson.
Yeah. That's not me. I'm like Path Train. I think that's different.
Okay. You can also swim.
Yes, I could.
Right? Because you're that close.
Yeah.
Yeah.
Yeah. It's rail, bus, and light rail platforms. Okay. So it might do the light rail that we have where I live.
So you're okay?
But I think I'll be okay.
The agency requested riders travel the system for, quote, essential purposes only. That's according to an alert posted to its website. NJ Transit unveiled a contingency plan should a strike impact the trains that shuttle about 100,000 people every day.
Yeah, I will say, talk to Paul Sweeney about, when there's problems. And
he loves New Jersey Transit.
He does, but gets frustrated. He's among those.
Mark Gongloff gets frustrated. Paul Sweeney looks at the bright side of things. No, maybe it's the New York City subway that he likes. I forget.
Who?
Paul. He likes NJ Transit too?
Yeah, but doesn't he get ticked off sometimes though at some of the problems we're talking about? Yeah, I do. Yeah.
Sarah's talking to us.
In the meantime, U.S. mass transit systems are facing a combined $6 billion shortfall, in the coming years, despite readership improving. So they rely on fares to fund operations. To close the gap, many transit authorities are preparing to increase fares, cut service, or both, which could lead to a death spiral of declining ridership and revenue. That doesn't sound good.
No, that sounds pretty awful. The financial pressures are exacerbated by shifting political and economic winds, including federal spending cuts, tariffs, and state-level funding issues. That could impact the ability of transit systems to upgrade infrastructure and maintain service. The concern is that, if the funding is not there, service gets worse. Right. If service gets worse, fewer people take it. If fewer people take it, you get less money from it.
Here in New York City, you don't have a lot of choices.
There are examples of cities that have crumbled, Carol.
Yeah, exactly. But I'm just saying,
the glasses half full.
It gets a little complicated.
It does. Hey, coming up next, it's our cross-platform coverage. It is the closing bell with our Bloomberg TV team. It starts right now.
Over those 7 days starts now.
Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, taking you through the closing bell. A global simulcast starts right now. Scarlett Fu in the TV studio, Tim Stenovic in the radio booth, Carol Massar back in her seat on a very busy day with a slew of big earnings coming after the bell tonight. And look, Carol, like this market was actually gonna, well, just puke earlier today, but it's now seeing some life as you get closer to those closing bells.
Is that on the CFA exam?
It was, page 1073.
A Bloomberg function,
which, believe it or
too.
not, is still chapter 1.
Puke.
Okay.
Having said that, yeah, fascinating. Tim and I were like looking at headlines, trying to figure out why all of a sudden we took a leg to the upside. I mean, we've been in the red all day, and now you've got more names in the S&P 500 because now all of the major equity averages, even if just a little bit, are in the green.
You know, it's interesting. We did see shares of, well, I should say the index down as much as 2.3%, as high as 0.24%. So a big range today. The real thing that we're concerned about is earnings. We got $6.2 trillion of companies reporting after the bell today.
Yeah, Microsoft and Meta are first up, and of course tomorrow we got Amazon and Apple. Worth noting here that the Nasdaq 100 is now up 1.6% for the month, and the Nasdaq Composite up 0.9% for the month. So much for April being a horrendous month for these big tech companies.
Yeah, you have to also look at, though, the last 20 minutes of trading. That's usually going to be fun buying, right? So whether or not that's going to be sustainable longer-term buying, that truly is a question, which then puts the highlight and the onus on these big tech names to deliver.
Absolutely, and we talk about the monthly performance too. I mean, I know there's been a lot of talk about the wire-to-wire change or lack of, if you will, but of course we can't be remiss in not pointing out the volatility in between. Realized volatility still at historical levels, and implied volatility over the next 30 days also well above recent moving averages. Your numbers on the day as we await those earnings: an S&P 500 that's going to close out the day relatively unchanged, up about 0.1%. The Dow up 0.3%. The Nasdaq down 0.1%, and the Russell 2000, Carol Massar, is going to close out the day lower by 0.6%.
All right, guys, we've got earnings out. Qualcomm already crossing the Bloomberg terminal. Let's go to the outlook. Sees third quarter adjusted EPS of 260 to 280 share. The street estimate is for 266 a share. Talking about revenue as well for the third quarter, 9.9 billion to 10.7 billion. The estimate is 10.33 billion. Stock right now unchanged in the after hour. Let's go back to the second quarter, the quarter that was. Second quarter adjusted EPS 285 a share. That's 4 pennies better than what the street was expecting. And second quarter adjusted revenue also coming in better than expected, 10.84 billion versus 10.64 billion, the estimate. But I think investors kind of a middle ground in terms of the outlook here, Scarlett. So maybe not necessarily loving it.
All right, some commentary too from the CEO, Cristiano Amon, saying as we navigate the current macro and trade environment, we remain focused on the critical factors that we can control, our leading technology roadmap, best-in-class product portfolio, strong customer relationships, and operational efficiencies. We're hearing that a lot from all these CEOs about managing what they can control. That's usually costs.
As a reminder, Qualcomm gets about 22% of its revenue from Apple, about 19% of its revenue from Samsung, about 12% of its revenue from Xiaomi. So sort of a good barometer when we think about the health of the consumer tech space, specifically when it comes to smartphones.
Yeah, and then to that point, let's take a look at that handset revenue, for example, coming in at $6.93 billion, up 12%. So clearly handset read-through not so terrible.
Microsoft numbers now crossing the wire here. The revenue number does look like a beat. This for their fiscal third quarter, $70 billion, $70.1 billion if we're rounding up. The street on average was looking for about $68.5 billion here. I'm still looking for some of the other numbers here, but at least a beat on the top line. I need a few more minutes here to dive into the release.
Yeah, it's just crossing, but let's point out to everybody as Microsoft continues to pour across the Bloomberg terminal, we've got the stock up about 6.5%. It was down about 6% year to date coming into these earnings, but Scarlett, definitely seeing a pop here in the aftermarket.
Yeah, this is a stock that's been down about 6.5% so far this year, and since its last earnings report, also down 11%.
All right, here we go. So operating income does look like a beat, up about 16% in the most recent quarter, up to $32 billion. Net income, the bottom line, up 18% to $25.8 billion. On an EPS basis, there does also appear to be a beat based on the average of Bloomberg estimates. The company says that with this Azure unit, this is basically the cloud computing unit, up 33% 11% on a year-over-year basis. The Street was looking for growth of about 31%. Its commercial products and cloud services revenue increased 11% in the quarter, and its consumer products were up about 10%. LinkedIn up 7%, and the dynamic products and cloud business, when you combine those up about 11%. Remember, this is on the revenue side here. So it does look like some pretty healthy beats all around, and you're seeing the shares drift higher in the after-hour session.
Yeah, Satya Nadella is saying that, quote, cloud and AI are the essential inputs for every business to expand output, reduce costs, and accelerate growth. From AI infra and platforms to apps, we are innovating across the stack to deliver for our customers. Everyone's going to want to know the outlook here. The company says it will provide forward-looking guidance in connection with this quarterly earnings announcement on its conference call and webcast. We will bring those numbers to you live as they do cross.
And no surprise, Amazon following Microsoft higher as well. If you take a look at cloud, it goes Amazon, and then it goes Microsoft, and then you get Google. So you definitely have Microsoft providing some strong numbers there. I do want to point out that we're talking about that 33% growth. In the last quarter, its second quarter, that cloud growth was 31%. So not even beating, but also increasing on a quarter-on-quarter basis.
And I'm so glad you mentioned that, because that was a big concern, that there was going to be this continued deceleration of growth in Azure and other cloud services. The fact that it re-accelerated is certainly a relief for most investors. I talked to Goldman Sachs analyst Kash Rangan, who was saying that anything below a 30% print on that Azure and cloud services revenue would have been concerning. So this kind of removes that, at least that layer of concern.
All right, folks, if you're just joining us, Microsoft soaring in the aftermarket, up about 6% as we speak. This after their third quarter revenue topped estimates, so they are looking for $70.07 billion. The estimate on the Street was $68.48 billion. So again, the Street liking what the company had to report. We talk about intelligent cloud revenue also coming in better than expected for the third quarter, $26.8 billion versus $25.99 billion. So again, pushing the stock up about 6% here in the aftermarket. That's a big bump to the upside.
Look, it was a great quarter, no question, but I think most investors are going to have questions about what the current quarter looks like and what the outlook looks like. You know, a weak dollar is certainly a beneficiary. The tech companies are a beneficiary that do business across the world. But we're getting other earnings crossing right now, too.
Well, let's get to Meta. I was just going to point out Microsoft's CapEx spending also going higher, but Meta, Alex, are now crossing the wire.
Yep, taking a look at Meta, its first quarter revenue coming in at $42.31 billion. That's a little bit light when it comes to estimates. Operating income, $17.56 billion. That's much better than estimates. Guys, want to get to the outlook. It sees its second quarter revenue outlook coming in anywhere from $42.5 billion to $45.5 billion, beating estimates.
All right, advertising revenue as a whole, which makes up the lion's share, if not more than that, like 90% of its overall revenue, rose 16% year on year for the quarter. The other revenue higher, growing at a faster rate of 34%, but that's only about $510 million compared to the overall advertising revenue of about $41.4 billion.
All right, stay with Meta, guys. So we're up about 4.7% in terms of the second quarter outlook for revenue, $42.5 billion to $45.5 billion, quite a range. Estimate is for $44.606 billion. And I should point out that the company, some commentary talking about CapEx. We anticipate our full year 2025 CapEx, including principal payments on finance leases, will be in the range of $64 to $72 billion, increased from our prior outlook of $60 to $65 billion. Again, Meta up about 3.2%.
The company calling out Mark Zuckerberg specifically saying we're making good progress on AI glasses and Meta AI, which now has almost 1 billion monthly active users. We've got a strong start to an important year. Our community continues to grow and our business is performing very well. The business is an advertising business at this point. Obviously, Mark Zuckerberg thinks that Meta AI and the hardware are certainly growth areas, but it's interesting that he calls out AI and the glasses with the 1 billion the monthly active users at the top of the press release.
I think it's interesting also that they're actually slightly increasing that CapEx spending. And just real quickly back to Microsoft, their CapEx expenditures as well, when you factor in all the other things, still at that roughly $21 billion level and going higher here. So that was a big question as to whether we were going to see a material pullback in some of those CapEx forecasts that they had given us in quarters past. At least for right now, it does appear that they are at least sticking by them, and in the case of Meta, increasing
them, which is interesting given that Mandeep Singh of Bloomberg Intelligence has noted that the CapEx over at Meta is growing faster than any other hyperscaler. So they are spending more on AI, and the big question is, when are you going to see that return on investment in its product line? It's rolled out Llama, the large language model, in WhatsApp, but it hasn't necessarily done that in the Facebook app or the Instagram app.
Two things to point out. Meta also seeing its full year total expenses a little bit lighter when they did what they did see between 113 billion to 118 billion. It's about $1 billion less on both ends that they thought. I also want to point out too, going back to Microsoft, that the Azure growth that was attributable to AI was about 16 points. It was 12 points in the last quarter. So the monetization and being able to profit off of AI is delivering, and that's going to be a key point for these companies.
Microsoft and Meta, certainly the companies we're watching, but not the only ones that are reporting. Robinhood out with numbers right now. Shares bouncing around, down about 1.9%. The company did report net revenue for the first quarter that met the average analyst estimate. Adjusted operating expenses came in above estimates. Adjusted EBITDA coming in just shy of estimates. Shares right now down about 1.5%.
All right, guys, eBay also crossing the Bloomberg terminal. It's actually up about 10% year to date. Let's get to the outlook. It sees second quarter net revenue of $2.59 billion to $2.66 billion. The estimate on the street is $2.6 billion. Reports also the CFO transition and executive leadership changes. So we've got some changes in the C-suite. And again, we're continuing. Let me just take a look at eBay in the aftermarket, folks, just up about 0.5%. So we are definitely seeing some stocks on the move. You got Robinhood moving, Meta, definitely we're seeing some big moves in Microsoft. Sorry, just pulling them up here. Meta's up almost 3% and Microsoft continuing a big bump to the upside, guys. It is up, as I pull it up about 5.6%. All right, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We will see you again, same time, same place tomorrow as we continue to break down earnings. You guys are going to continue on TV. We'll continue on Bloomberg Business Week.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It's Bloomberg Business Week. That's Carol Masser. I'm Tim Stenwick. We got a lot of companies that are reporting right now. You heard it from Carol just now. Meta Platform shares up by 3.6%. The company posted first quarter sales that beat Wall Street estimates, sign that the company's advertising business is so far weathering the Trump administration's ongoing trade war. We got with us Mandeep Singh. He's Bloomberg Intelligence Senior Tech Industry Analyst. He joins us here in the Bloomberg Interactive Brokers studio. Mandeep, I want to start with Meta Platforms. I think there was a little bit of concern yesterday with the Snap earnings, not really like for like when we think about the companies, but if there's concerns about advertising and pullback, then naturally the response is, wait, is this going to hit Meta Platforms? Did it?
No, it did not. And look, we knew 1Q would be solid, but the fact that they gave us a 2Q guide, and that too was almost in line with consensus, tells you they have more visibility about the impact of the pullback from Chinese advertisers, the de minimis rule that everyone has been talking about, and they think it would have a very limited impact on the business. Obviously, there will be more details on the earnings.
You mean a pullback from like a Shein type of business?
That's right.
Okay.
And so, look, even though they have almost a 10% revenue exposure, the fact that, it's an auction model meant that they would have more of an impact on the ad pricing. Mm-hmm. And this guidance suggests that that ad pricing impact is fairly negligible.
What does this tell you about, it's just interesting that we go into this earnings season, right? And you have companies, maybe in the traditional kind of economy, whether it's airlines and others, who are giving a couple of different scenarios. And then bam, you have something like a Meta, and we'll talk maybe Microsoft in just a moment. These are strong numbers.
These are very strong numbers.
So how can they do, how do we make sense of that?
Well, I think one, these are the highest ROI ad platforms. So if you are an online business, you don't have a choice but to spend your ad dollars on Google and on Meta platforms,
Even
Instagram.
if you're worried about the economy or recession, this is where you're going to go.
This is where you are going to go to engage with your customers, to show an ad to your customers, because every company is an online business, and this is the highest ROI. Now, you're absolutely right that Snap last night didn't sound very confident about 2Q, and that was the reason why they didn't guide for the second quarter. So I am surprised by the fact that they did guide, and it was really a very healthy guide given the macro backdrop. And it sounds like they are much more confident about their advertiser base, which is predominantly small businesses. So when you think about Meta Platforms, they have over 10 million small businesses that advertise on the platform. So
explain, like, that's what I don't understand.
So is it a Meta Platform story? I mean, you told us last week that Google is a very efficient way to advertise. So you weren't surprised to see the numbers that we saw from Alphabet last week. Is it the same thing when it comes to Meta Platforms? Like, this is just such a good way to advertise that even if small businesses see a pullback, they still see value when it comes to spending money on this platform?
Yeah, so in terms of the pecking order, you are probably still going to spend on Meta, but you may pull back on Reddit, on Pinterest, on Snapchat, and we don't know. We know Snap didn't do very well. We don't know about the other two. But in terms of pecking order, Meta is the highest priority ad spend for any advertiser. And I'm surprised SMBs are still continuing, because I would have guessed
small and medium-sized businesses.
Small and medium-sized businesses, because the tariffs would have caused a lot of uncertainty. And look,
that's why I'm asking you. I'm trying to understand an environment where so many companies are like, we're not even going to give you an outlook, or we're going to give you two scenarios. And then you've got a company like this that's willing to commit, but also plays to the small business community. I'm just trying to understand
it. It does. And look, the advantage of having such a fragmented advertiser base is even if a few advertisers do pull back, you have a majority of the other advertisers that may double down given they have favorable conditions. So it sounds like in this case, some retail advertisers may have pulled back. But then, you know, you have other pockets within the economy like financial services that may actually have doubled down, thinking the ad slots are much cheaper right now compared to where they were 90 days back. And so that is a phenomena that's always there with digital ad platforms, that somebody else may step up because the ads are much cheaper right now.
You know, I'm looking at the press release, and one thing that I saw that kind of surprised me a little bit was Mark Zuckerberg at the top said we're making good progress on AI glasses and Meta AI, which now has almost 1 billion monthly actives. We'll get to the number in a second, but that's what he chose to highlight at the top. He didn't choose to highlight the strength of the advasing business. Make no mistake, this is a company that makes...
Because he's raising the CapEx. So the CapEx guide went from 60 to 65 to... So
what does that tell you?
Well, it tells me that they are really going big in terms of setting up this AI data center infrastructure for rolling out more AI on their family of apps, and they see a lot of ROI when it comes to the AI spend.
What does it mean that it has almost 1 billion monthly actives? What's he talking about there?
Well, so Meta Platforms has 3.5 billion monthly actives across their family of apps.
So that includes WhatsApp, Instagram, Facebook, Messenger,
and so 1
like.
billion of those, predominantly through WhatsApp, are using Meta AI. I don't think there is a lot of Meta AI on Instagram or the Blue app yet, which I was surprised by given how much they tout Meta AI. But it's predominantly on WhatsApp right now.
What are they using it for on WhatsApp? Are they using it like an LLM? Are they using it like a Chat GPT?
Yeah, it is a form of search on WhatsApp where you can sift through your messages. You can actually do a lot of group kind of correspondences using Meta AI.
So it's basically an assistant for the app.
That's right. But still, I would say I see it more on WhatsApp than on their Instagram and Blue app. Yeah.
All right. So Meta's still up about 3.4%.
Should we talk Microsoft?
Let's talk a little bit about Microsoft, because this one was just kind of off and running in a big way in the aftermarket. The stock is up about 5.6% here. Again, some strong numbers. Let me just pull it up here. The company, in terms of, it posted strong revenue growth, cloud unit expansion. This one also seemed really strong.
I mean, Azure 33% when everyone was thinking, oh, Google had a slightly lower number on the cloud side. I mean, 33% is a very impressive number.
And for cloud revenue, right?
For cloud revenue. And again, this is the one company that has benefited the most when it comes to AI infrastructure and actually monetizing it. In the case of Meta, you still don't see the monetization on AI.
Meaning what specifically?
Well, the AI inferencing revenue. So that is what shows up in the Azure growth number.
Yeah.
And in that 33%, your AI contribution is north of 15% right now. So 15% of that 33% growth is all AI revenue.
Hold on. Do we care about these numbers if we don't have the guidance yet?
Well,
investors certainly do after hours, sending shares higher, but we're not going to get guidance until the call.
This is recurring revenue, Tim. So when you think about
as long as people keep paying.
Yeah, and enterprises don't really pull back. Like on the ad side,
I will say if they have fewer employees, they would pull back. If they lay off employees, wouldn't they?
Still, you need your AI infrastructure.
You do.
So
okay.
Think of what they are doing with the AI infrastructure. They're rolling out chatbots, AI agents. So even if they are retrenching in terms of headcount, you still need more AI agents because.
So everything is awesome, Carol.
One last question. So same thing, my question to Meta. Like when I'm trying to understand what is going on in a lot of other companies, obviously they're not these big tech companies, like is this telling us a different story in terms of what's going on in the economy and the impact of some of the White House policies?
Well, so companies are clearly prioritizing AI initiatives right now, regardless of what is going on in the macroeconomy and the tariff situation. Everyone is concerned, but no one has pulled back on AI-related projects. And clearly, this is an illustration of that. We'll wait for the guide. I mean, these are 1Q numbers, so we don't know how they guide to for 2Q.
Right.
But 1Q numbers are strong from both companies.
Cool stuff. Mandeep, you got to go. We appreciate you sticking around and hanging with us. Do appreciate it. Not just Microsoft and Meta Platforms reporting, Qualcomm. In the after hours, shares are bouncing around a little bit. The company did give a tepid revenue prediction for the current quarter. It underscored concerns about tariffs that will hurt demand for its products. As soon as these numbers crossed, we did see shares in the after hours move lower, down about 4.8% as we speak right now. Kunjan Sabani is Bloomberg Intelligence senior semiconductor analyst. He joins us once again from our San Francisco bureau. Kunjan, your reaction to the numbers, tepid?
Not surprising to us. In fact, the results and the outlook turned out exactly how we had called in our preview. We thought the actual reported quarter might see a beat, likely due to strength in China Android. And from the results, we are also seeing some better than expected IoT, which is really a positive sign. But that sort of inline outlook with the comment that, you know, they're taking a conservative approach, that's what we had expected. So not really surprising anything what we have seen so far.
They're also saying, the CEO, Cristiano Amon, saying, as we navigate the current macroeconomic and trade environment, we remain focused on the critical factors we can control, our leading technology roadmap, best-in-class product portfolio, strong customer relationships, and operational efficiencies. It sounds a little bit like C-suite speak, but what, you know, they are saying that there's some navigating through this macroeconomic environment. Is that in trade environment? That's just all the stuff coming out of DC?
Well, yeah, and remember, this smartphone market is sort of the most susceptible to any uncertainty or a recessionary scenario or a tariff impact, given totally consumer-based. And both the key regions where they sell, right, US and China, both are sort of directly or indirectly getting impacted by tariff. The second thing to remember is this is the year, starting with even the spring iPhone launch, where Apple started sourcing their internal modem and swapping out Qualcomm. You're going to expect to see this more in the upcoming iPhone launch in fall. So they're already, even if you take out the tariffs and uncertainty, they already had these headwinds of loss of revenue. It's significant, billions of dollars, not maybe this year, but starting to happen this year. They really needed an offsetting positive catalyst. And when you put in uncertain macro on top of it, maybe impacting smartphone growth overall, that's sort of not the best situation they want to be in right now.
We'll hear from Apple tomorrow after the bell, but shares in the after hours down about 0.2%. Can we get any sort of preview from these numbers, given that Qualcomm does get 22% of its revenue from Apple?
Not these specific numbers, right? The spring phone launch, that's a very small volume, so we can't expect or predict anything. The real indication will come from the fall launch. Again, the numbers there are very difficult to predict at this point. The other point I want to add is, right, they're in this weird situation where if because of tariff situations and if because of significant tariff on China, if Apple loses share, whether in China or in US, that indirectly can be actually good for Qualcomm Qualcomm at the same time that they're swapping Qualcomm out, that share, if picked up by Android, that could be actually better for Qualcomm. Not just on the revenue side, but also on the margin side, because Android is a higher margin business for them.
Okay, that's good to know. Anything else, Kunjan, that you can glean from this? Oh, go ahead,
Well,
Carol.
and I'm thinking, what's the number one question? I know I always like to throw this out, but what do you want to hear on the call, or what would you be asking?
I'd be asking a very difficult question is that, look, we know that the Apple share loss is coming. The estimates have inbuilt some of the loss. What is the offsetting catalyst here? Where can you grow or minimize this loss, especially in this current environment?
All right, going to leave it there. Love it. Kunjan Sobhani, he is Bloomberg Intelligence Senior Semiconductor Analyst, joining us from our bureau in San Francisco. Kunjan, thank you so much. We'll look forward to his research hitting the Bloomberg a little bit later on. We got to get to our Ed Ludlow.
Yeah, let's bring in Ed Ludlow. He's actually here in New York City. He's the co-host of Bloomberg Technology, with more on the tech earnings that just crossed. Microsoft posted strong revenue growth on cloud unit expansion. Meta revenue beat estimates on advertising stability. Meta coming out and giving a guide that pleases investors. Microsoft, we don't know what they're guiding yet. We'll find out on the call. Where do you want to start?
Let's go with Meta, just because it's actually an easier story to understand. Meta makes money from advertising. Anyone that's been on Instagram or Facebook, increasingly other apps will know that. And so the outlook for the current period shows that in everything that's going on right now, they're holding their own. They're holding up. The ad market is basically conviction driven. So if there is economic uncertainty, advertisers are usually a little bit cautious and tepid. So that's really interesting. Meta always gives a guidance or an outlook for the current period. Last night, I think you covered it, right? Snap did not. And what happens when you don't? Your stock falls 15%. So that was interesting. But I think there is something to understand in the capital expenditures, because people misunderstand what it is Meta does with that money. So maybe we go there next.
Well,
So Meta is not a cloud computing company. It is a social media company that's working on AI, and AI is product, generative AI, and AI to drive the value of its ads. But it does own and operate its own data centers. They've dramatically raised the CapEx guidance for this year. 64 to 72 billion. Sorry, I'm not looked on the
64 to 72. They had seen 60 to 65 billion. The estimate was just below 60 billion.
So what does that mean? They're going to put more money than they said they were into data centers. More data centers, cutting edge chips in those data centers, more likely they'll drive development in AI. But the single line in the statement that is so critically important is the majority will go into the core business. They will invest in the things that support ads.
Well, that's exactly where I wanted to go, because Mark Zuckerberg called out Meta AI. He called out the hardware in the top of the press release. Mandeep smartly pointing out, well, that's because they raised CapEx, so he wants to draw attention to the strength there. Look, this is an advertising business, no question. What is going to go toward developing new products, like products that we can wear, products that we walk around with, versus making the ads more effective to sell us things, which is Meta's core business?
Yeah, and so real quick, we're making the distinction between hardware, which is a consumer electronic one wears on their person, and infrastructure, which is data centers, and that's really important. So right now, Meta AI is a generative AI function that you can use through a standalone app as of this week.
Yeah, that's brand new.
Or you can use it through Facebook, WhatsApp, and Instagram. I use it a lot through Instagram for whatever reason.
More so than you'd use ChatGPT, but
I use ChatGPT more than any of the others, but it's analogous.
Okay, so before, I just want to pause you just so everybody understands, what are you using AI on Instagram for that you're not using on ChatGPT?
I find it analogous, right? Because one of the strengths of Meta AI is you can say, Meta AI, please take this photograph of me and turn it into an animated image where I am depicted amongst the team of my favorite football team. Something like that, right? And it's analogous with Instagram, but it does much of the same things that ChatGPT does. It answers questions up until the date on which the data was trained. Now, the hardware component is that Meta does not make a smartphone. It has dabbled in some other home devices, but the principal way that you engage with the AI is through Ray-Ban Metas, glasses you wear on your face that have the computer electronics integrated with cameras. And I use them all the time, and you basically say, hey, Meta, and then it goes, woo, and then you ask it questions, and with audio, it responds back. And this has been a massive surprise to Meta. It started as a gimmick, frankly. And tying this to earnings, I think what Zuckerberg's saying in the statement is, hint, hint, I'm going to talk a bit about this on the call, because the sales of that product have been better than expected, but they also have to tell a story of, well, what's your thing? How are we going to interact with you in the future if people aren't using smartphone applications as much.
I mean, as you have used them, I mean, is it a product that could be mass adopted in your view?
Yes, in so far as the sales have been surprising, they don't break out clear data, right? They don't say, oh, well, they might actually, maybe they'll surprise us, but they don't say, like, we have sold 10 million of these, and that would be helpful if they did.
But as you play around with it, are you like, I could see X?
Yes, but the sales, we know the sales have been better than expected. Now, here's the investor Wall Street bit. For a really long time, the unit that was responsible for us as humans, our engagement with the metaverse and now AI is Facebook Reality Labs. And for many quarters, it would lose billions of dollars, and investors would say, stop losing billions of dollars. And then they just stopped. They started looking past it. And part of that was that the hardware started getting out there, and people could see the distant future where we all wear these devices. The metaverse is still a thing. I mean, if we can go there if you want. But at the end of the day, it's a story of massive investment to develop AI, the software, and then catching up with the company's self to say, this is how we think all of our billions of users around the world of our apps will interact with that AI in the future.
Okay, so let's stick on the AI theme here. Let's say I'm an analyst. I want to know, great, it's all well and good that you're spending this money. It's all well and good that you've made these developments when it comes to hardware. Let's get back to ads. How does that make the ads better that are targeted to Ed on Instagram when he's using AI?
So some of the metrics that,
certainly it's more engaging. You're spending more time on the platform, so that's a positive.
So people will look at Meta's core data, like the daily active users and ad impressions. That gives us a sense of how healthy and competitive that ad market is. Listen out on the call. I would wager that Mark Zuckerberg gives some different data to try and justify why Meta's ads are better in a tough economic environment because of the investments in AI. Go back to the earnings statement. We will invest the majority of CapEx into core business. In other words, we're putting a lot into AI because we think it will grow the value of our ads. That's what I think will happen. Yeah.
This is what I feel like we talked with Mandeep Singh about this whole idea.
Knows. He's
well,
smart
this idea
guy.
of like if you're going to spend money, you're going to go to where you get the biggest ROI, right?
Yes,
in terms
or eyeballs.
of
think of it as sheer competition for eyeballs.
Absolutely. Yeah. Hey, two things we want to get to before you have to run. Let's just talk Microsoft real quickly.
Oh, wow.
I mean, off the charts, still up about 6% here.
So analogous with Meta and Google is that if your core business performs and you are committing to spending on AI, investors will reward you. And that's very much the story here. 33% top line growth for cloud. And that's what it comes down to, right?
Yep.
I always have this line, Microsoft, which I've had a relationship with since I was a child and I learned to use a computer, was always good at getting people to pay for software that others will give away for free. That's a true story. But they're showing that their core businesses, cloud computing and Azure, where they're the market number 2, again, it's the same as Meta. Does your core business justify your right to spend on AI development through hardware or infrastructure data centers? The Microsoft numbers tell that story very clearly.
Didn't Mandeep say that actually it's showing the monetization of AI, that I think in that 33%, almost half of it, or close to half of it, was the result of AI and AI
and I didn't mean to be flippant. The criticism was they released Microsoft Copilot, and many people thought that was prematurely. If you're an everyday tech worker, what am I going to use this for? Nonetheless, the numbers show that people are paying for it, and that's impressive.
Hey, Ed, we're going to hear from Microsoft on the call. We'll get some guidance there. Obviously, that will help people get informed about how the company's thinking about the current quarter and the future. Apple tomorrow.
Oh, gosh, yeah.
Mark Gurman said, I don't care about the numbers for the most recent quarter. I just want to hear the Q&A. I want to hear about tariffs. I want to hear about the supply chain. I want to hear Tim Cook's comments there. You agree?
Yeah. Tim Cook famously says periodically, I am not an economist, but, and then will give us something about
He's not an economist, but he's a supply chain expert.
Yeah. Like stories about hardware companies, think people that make tangible physical stuff. They're built from components that move from A to B all over the world, and there are cost implications. And there is no better microcosm of what's happening right now in global trade than Apple. And I get what Gurman's saying, but remember that Apple is the master of managing the bottom line. So if you are a value long-term investor, whatever you want to call it, people do pay attention to that because Apple is brilliant at boosting profit.
You know, Apple has... Mark Gurman has reported over and over again that Apple has struggled with AI, and we see that with what has happened with Siri. Do you think they should buy or would buy
Oh my
one of
goodness.
these standalone AI companies?
For those listening on radio only, I was smirking and nodding, going, yeah. Yeah, I mean, Siri, has been a bit of a flop.
Oh,
the early
I mean, Mark Gurman
generative
would
AI.
say, bit of a flop, a huge flop.
Yeah, and I've covered so many stories today, I lose track, but I think that there was some discussion by Alphabet about working with Apple and Gemini, their model going forward. Apple's looking at third parties to provide the underlying model that powers all of this. And as Mark has reported, the consequence of the poor rollout is they've now restructured that company at the top. Leadership changes, organizational changes to get back on track. I still love my iPhone, but I do not use Siri ever.
Yeah.
Yeah, same.
Hey, before you go, we did talk Apple and Trump and tariffs. You've got a scoop when it comes to Rivian and what they've been up to.
Yeah, so prior to the US election in November, Rivian arranged with a Chinese battery supplier called Gotion to move a supply of LFP batteries from outside of the United States into the United States, and they paid for it up front, which is unusual for an automaker to do. You don't sort of say, okay, I'm not going to use these for a while, but I'll pay for them anyway. And it did that to have a strategic stockpile as a hedge and insurance against the election. Then, more recently, I found out Samsung SDI, its Korean supplier, they said, Samsung, before these tariffs hit, we need you to move a very large inventory of battery cells from Korea to the US. Samsung did. So they have this hedge against potential tariff impact, but it's not really about money. It's about anxiety that at borders, goods get stopped and then you're left short.
This is why when we look through some of the economic numbers, kind of the pull through in advance of tariffs, you got to keep that in mind in terms of economic activity.
Hey, Ed, real quick. It's been a while since we've gotten to talk to you and since you've been here in New York.
Sure.
On Rivian, on everything happening in the administration, given Elon Musk's close proximity to the president, has Rivian been a net gainer or a net loser? Given
in the story we just reported at, and read the details, I put a lot of detail in the report, they made a shrewd move. The question that every auto CEO, I know this, every CEO is asking is the net result that Elon Musk secures something that is specifically good and beneficial to Tesla, a carved out exemption, or in so doing, does Elon Musk get an exemption for Tesla or some kind of benefit that has a wider positive impact on those that make EVs? And I think the latter is where people are hanging their hat.
Yeah, kind of a fascinating day where I think everybody's speculating. It did feel like a little bit of the president saying, not necessarily goodbye to Elon, but kind of him wrapping up certainly his tenure. Working
Which
at
Danaholt
Doge
reminded
and the
us
government.
we all knew was coming, given his status as a special government employee.
Exactly, right? It was
Shouldn't
just a matter of
surprise
time.
anyone.
It was just a matter of time. Yeah, pretty wild. Any top questions, top of mind in terms of the earnings that we've seen, this dump that we've gotten today?
Like Alphabet, Google, they don't give guidance, they don't give detail, they don't tell you about anything in the economy. I would think that Meta and Microsoft would go a lot further, specifically like industries, geographies, and we would learn a lot about what they see in the world. And so not just Apple, those other names will give us value, I think, in the economic context.
All right, good stuff, as always. Ed Ludlow, thank you so much. So appreciate it. Ed Ludlow, of course, is co-host of Bloomberg Technology. Catch him and Caroline Hyde. They are on Bloomberg Television at 11 a.m. Wall Street time, Monday through Friday. So I'm assuming this coverage will continue into tomorrow. And thank you.
Yeah, speaking of Washington, D.C., we are keeping an eye on the White House, where President Trump is set to deliver remarks on investing in America. We'll take you there when we do start to hear from the president. In the meantime, I do want to bring in James Chalkmock. He's partner and chief investment officer at Clockwise Capital. He joins us from Miami. He's got the Clockwise Core Equity and Innovation ETF. It's down about 8% so far this year. It does include Apple, Microsoft, Amazon, and NVIDIA among its top holdings. And that's exactly, James, where I want to start. Given what we just heard from Microsoft, we got the numbers there from Ed. Investors happy in the after hours. The company will give guidance on that call. What are your thoughts?
Yeah, I think from a big picture standpoint, we went into tonight kind of ranking the mega cap earnings remaining as Microsoft as the least risky, moving to Meta, and then finally to Amazon as the riskiest of the three. And I think so far it's playing out as such. Microsoft, the big number there, the bogey we wanted to see was north of 30% Azure revenue. We're looking like the momentum continues to be there. I think, when you look at the mega cap earnings, mega cap companies, really what we try to focus on, which ones are the most immune to tariffs, which ones have the most resiliency. and which ones have a valuation that supports some level of support. So I think Microsoft underscores all three of those, and we liked what we saw. And Meta, that was not the best of outlooks, but expectations had come down substantially, particularly following Snap's results last night. So the fact that they're even giving an outlook is a net positive, and that one has come in a lot from a valuation standpoint.
Listen to the standards. Listen to the fact that they even give an outlook is a net positive. That's the environment we're in.
This is what we're trying to get our head around. I mean, James, I'm looking at shares of Microsoft still up about 6.2%. If I look at Meta, it's up just shy of 6%. And I pulled up Amazon, which in 24 hours, we're going to be all over Amazon's earnings. It's up about 2.8% here in the aftermarket. But I'm trying to get my head around what these companies are saying and doing versus kind of, it feels like so much uncertainty in the rest of the, public universe, or so much uncertainty, or companies not giving an outlook, or companies giving two outlooks. So do we set these companies apart, or does this say something more strongly about what's going on in the U.S. economy and the global economy?
Yeah, we're not going to be too quick to judge, how these companies are doing over the very short term about the broader macro implications. We still see us at a 50-50 market at best. Yes, the results have been largely coming in on par, maybe slightly better than expectations, but we're not out of the woods by any means. You still have reinflation risk, recession risk. The behavioral changes haven't even really hit the consumer yet. You saw that from Visa's results this morning. So, you're seeing some repositioning from a business standpoint of businesses try to adapt as best as possible, but it hasn't hit the consumer. There's a lot of unknowns. The only thing I'd say that is a net positive is that you've been seeing the FOMC members start to posture their rhetoric to a more dovish posture as we have the May meeting coming up. So that could help provide some level of support to the broader market, but it doesn't help in any way, shape, or form provide that much incremental confidence as it relates to the earnings outlook for the balance of the year.
James, one of the reasons we like talking to you is not just because you are an analyst or have an analyst background covering all of these companies, but also because you put your money where your mouth is with the portfolio management of the ETF, the Clockwise Core Equity and Innovation ETF. Apple's your top holding. Dollar General is your second biggest holding. Explain that. Are you essentially trying to grab every type of consumer out there? You've got the high-end consumer with Apple, then you've got everybody at Dollar General?
Well, the way we look at it is, periods of maximum uncertainty require maximum adaptability. So what we're trying to do is, in a 50-50 market, play things down the middle. What that means is we're taking a barbell approach where for every dollar of beta, of higher beta, we're adding a dollar of much lower beta. And that's where the Apple and Dollar General kind of equal weightings come into play. But a more extreme example that I'd point out is, we have the equal weight with MicroStrategy, or strategy now, as we do with Dollar General. So I wouldn't read that much into Apple. I mean, that has something to do with the fact that it's such a big weight in the index. But I think MicroStrategy is a better example of, how polarized, the barbell is that we're playing.
Which, to remind everybody, is a levered play on Bitcoin.
Yes, I mean, we think that crypto single-handedly, it's the number one asset class that I have confidence in for 2025. I think Bitcoin is going to be the single largest contributor to returns in 2025. I can't say that the same about any other sector. Now, we're partial to.
Really? Why?
Yes. Institutional adoption, building awareness. There's going to be crypto-related services. You had the Fed, remove barriers as to what banks can do as it relates to crypto. So I think that as the regulations come off, awareness builds, institutions build. BlackRock says that it should be 2% of portfolios, across the board. We completely agree with that. All our client portfolios have at least a 2% position in Bitcoin. And as we look to the balance of the year, we just don't have confidence in really any other sector to the same degree. We like tech, to cheaper tech. We like commodities. We like utilities, and we like staples. Where the valuation makes sense. But crypto, no hesitation, and it's full steam ahead.
Interesting. So it sounds like you have been putting money to work over the last month or two amid the volatility. Yes.
Yes.
And then, go ahead.
Yeah, we're putting money to work when and where we can. We've been selling a lot of the mega cap names into any opportunity we have into strength. Just to give you a sense, the top 10 weights in the NASDAQ are about 50% of the total index. We're about 40% of that. We're at about 20%. So, we are underexposed on mega cap. So selling into strength, utilizing that cash to diversify into more value names like Dollar General, which you pointed out, Tim, and keeping the pressure on the crypto front as best as possible on any pullback that we see.
But you did, I'm just looking, you've owned MicroStrategy. Are you out completely?
Oh, no. We've been grossing it up every single time it pulls back.
Oh, I'm sorry. So that one you've been moving it. Yeah.
Yeah, it's the mega cap names, the Microsofts, Amazons, Metas, those are all significantly underweight relative to the index. And we think it's prudent to stay there until we have better clarity on business spending and the consumer. We just don't know exactly where Amazon's going to be a big tell tomorrow. You can argue that the cloud services, Google was better than expected, Microsoft better than expected, so business spending is there. But it's certainly, you're not seeing, SMCI's results would tell you a completely different story last night. So too much uncertainty.
So just going back, Meta reporting today, it's up about 6% here in the aftermarket.
Yes.
We just talked about it. So revenue beating estimates on advertising stability. I'm looking at Microsoft up about 6% here in the after hours. Again, third quarter revenue topping estimates. Amazon has moved up ahead of its earnings tomorrow after the close, up about 3.5%. Qualcomm's down about 9% here in the aftermarket following its numbers. It gave a soft revenue forecast in the face of all the trade turmoil. So we're seeing anything here that's of interest, or this is, again, not the way you want to play it right now?
Yeah, I mean, we increased our Microsoft position the moment the numbers came out.
You did.
So we de-risked it into the quarter. Now that the numbers are out, we got it up a couple percent. So,
wait, but does that story change potentially when we hear from the company on its earnings call and they talk about guidance, or are you confident in guidance?
Microsoft was the only one of that group that we liked into the quarter, which is why it was weighted slightly more than both Meta and Amazon. But we decided to take it back to where it was prior to the quarter, just because we believe it's the most insulated from all of the noise, geopolitical and otherwise. While Meta and Amazon, we would wait for the exact commentary on the call to be able to make that decision.
Okay. Hey, just big picture, how do you think the economy is doing? How do you think the consumer is doing? How do you think they're going to weather these tariffs?
I don't know. I mean, I could give you anecdotes. Like I went to get my haircut yesterday, and my barber was telling me that business has been slowing dramatically. You hear from companies like Visa, and they'll tell you otherwise. But companies like Amazon come out and say, Amazon, Andy Jassik was saying that you're seeing trade down of purchases to lower ticket items. So it's a mixed message, and the thing about it is that we're really not going to get a sense of from a economic data standpoint, nor from a company standpoint, on the exact repercussions on the consumer for another 30 to 45 days. So it's a lot of question marks out there, but I think that the bottom hasn't fallen out of the consumer yet. The behavior has kept up. But how long will it last? We don't want to wait around to see and find out. We'd rather, just be proactive and be balanced in the areas that we have conviction in, with the value areas that we think can withstand a downturn and increase hedges where we can. Because right now, it's impossible to say or lean in either direction. We're just getting incremental data points. But, they'll build up to a full, more formulated story in the next couple of weeks.
Yeah, it's fascinating. Bloomberg, and I know other people talk about it, but it's something like the beauty salon index. But basically,
Peter Atwater sent me a message on Twitter about this today on X.
It's
Peter Atwater of William and Mary.
I love that he wrote that because it's kind of salons have been talking about how people are trading down on services. They're not doing as much. They're cutting back, and so it's just kind of one of those unofficial indicators of maybe what people are doing, kind of conserving their spending because maybe they want to, or maybe because they have to, in anticipation of what's to come. Top question for any
regardless of the economy, I had to get my hair cut because I'm going to the Grand Prix this weekend.
Ooh,
so
so things are good.
That's a necessity.
Yeah, that's a necessity. Is that a discretionary expense, James, or is that a business expense? How do you look at that?
I'm incredibly passionate about Formula One. Actually, we own Formula One in the fund, FWONK. We think that is a resilient business that's going to continue to grow. But it's discretionary, but it's also something I'm incredibly passionate about. Passionate enough to actually own the underlying stock.
Love it.
Pretty cool stuff. Hey, just going back to the companies that have reported after the close, as we mentioned, Microsoft, rallying, soaring in the aftermarket. Meta is higher. We did talk Qualcomm taking a big hit, down about 9% in the aftermarket. Pick a CEO, pick a company. What might you want to ask them? Go anywhere you want.
I mean, the biggest question mark we have is on the consumer front. So I'd go straight to Amazon, to Andy Jassy, and basically ask him to try to give us more color than what we got from Visa. What is the degree of trade down in purchases? How has the patterns changed from day to day? Over the course of April. We just need more color on what's happening underneath the hood, and we're just not sure about it. But business spending, seems to be there for the most part, but the consumer drives the economy. We're a spending economy, and any clarity you can provide on that would help us ascertain exactly what we need to do going forward. So I'd point my questions to Andy.
One of my questions to you, James, before you go is, you answered my question about the economy. What about when it comes to a long-term trade war, a standoff with China, sort of a stalemate here, 145% tariffs? Yes. We've heard about factory activity possibly slowing down there. I know that some of the big box CEOs here are concerned about what happens if we start to see empty shelves. How do you look at that specifically?
Yeah, I mean, the empty shelves thing is a big deal. In about 2 weeks' time, we may come to a situation where people can't get their goods. So that's a real risk. When we think about the broader tariff risks and whatnot, and the consequences of that, we do think that the tail risks in the market are much more prevalent today than in many, many years. We're looking at, issues with our national debt, issues with credit risk, credit downgrades. The yields have continued to rise. You hear from the administration that foreign investment continues to stay strong. But if you look under the hood at the actual auctions, you see foreign purchases of U.S. Treasury bonds falling as a percentage of the total, with much more coming from direct buyers who are based here in the U.S. So foreign demand is falling. The dollar is falling.
Right.
In the meantime, you really have to watch Japan, because Japan, you have a strengthening yen.
Yeah.
You have rising interest rates there, and you could totally have a Japanese carry trade 2.0 as well. So tail risks in the market are more prevalent now than ever, and it's certainly something that we're monitoring constantly. So you have both short-term risks with the recession and long-term ones.
Great perspective on the specifics of these companies and so much more. James Chakmak, thank you so much. Partner and Chief Investment Officer at Clockwise Capital, joining us here to break down some of the earnings.
Let's take a look at some stocks on the move today. Bloomberg cross-asset reporter Isabel Lee is here in our studio. Isabel, what do you have on your radar?
First, I'll talk about Caterpillar. So this is a company that presented a dual situationship going on, and that's, I think, becoming a new trend. The first is if tariff remains in place and the economy dips into a recession in the second half, they expect slightly lower sales this year. That's in line with estimates. And the second is without tariffs. If we don't see tariffs, the company said profit will be at the top end of that range with sales little change from last year. And to the earlier point we made, it's such a diverging situation, but it just really paints how much tariffs will affect the economy. And for the quarter, the company posted earnings that fell short of estimates.
We should point out the stock was down as much as 1.7%, right? Up as much as almost 3% and kind of ended just a little bit higher on the day after that, 0.6%.
A roller coaster.
Do you have zero guidance? Do you have no guidance? Do you have one set of guidance, or do you have two sets? That's the question.
Yeah, and companies, in terms of how they are rewarded or hurt in terms of stock reaction, it kind of is all over the place. All right. Let's go to Starbucks.
Starbucks, this is interesting because we have the CEO really doubling down on the progress they've made and said that, we're reviving growth, we're doing our best, but he did also admit that, okay, results were disappointing, but under the hood, please focus on that. And if you think about it, he took the helm in September and he's made a lot of changes. He tried to eliminate long lines. He tried to streamline the menu. He didn't want people who came in store to suffer. And to his point, we have same-store sales declining 1%, and that's falling short of estimates. EPS also edged lower. And let's see, the stock today edged lower also by 6%.
Yeah, was down as much as 11%, right? So bounce, kind of as the overall market, I feel like came off its lows, but still that's a pretty big hit. Got to appreciate kind of his honesty, though, about some of it.
He seems like he's a really good boss. Remember, he made headlines because of his pay package. They got him from Chipotle and said that, Starbucks is back to working from the office, but the CEO isn't. But
I mean, he lives in Newport Beach. He's got to get to the office in Seattle. Have you seen how sunny it is in Newport Beach versus Seattle?
I will say when he was at Chipotle, many folks would weigh in on this, that they were coming off a really rocky time. And in terms of, he took it over just as COVID was kicking in, digital ordering and so on and so forth, really ramping up. And many would say really turned around that company in terms of going forward. All right. Snap, not a good day.
Not a good day, and this stock really also saw a roller coaster day. It ended the day, but down by just 12%. It was as lower as much as 17% earlier in the day, I think. But they beat revenue estimates just by a narrow margin. They declined to issue a sales forecast for the current period, and I think this is really what spooked investors. And like everyone else, they cited macroeconomic headwinds. Morgan Stanley said that this just speaks to maybe how much worse shape the business is than they previously thought. We got a slew of price target cuts by Guggenheim, Raymond James, Citi, and it's just really one of the many companies warning about how difficult it is to do business in this backdrop.
Okay, what else are you watching?
I have two surprises. So one is Robinhood. This one is interesting because retail investors flock to Robinhood even amid the tariff volatility. But I guess because of the tariff volatility, then you want to trade it. It really depends. I mean, not everyone is just in it for the long-term win. Companies' crypto revenue, though, doubled, but growth slowed from each of the 4 quarters. And share slump in aftermarket trading, it recovered partly by 1.5%. But this was an interesting news because I feel like, it's interesting to see the growth of Robinhood back from the meme stock pandemic glory days to now. It's really a big company that's solidified and has a good reputation. And
it's a $43 billion market cap company.
Yes,
I think
grew.
Yeah. A lot of people out there would talk about the maturation of the platform.
That's a really great word, maturation. I'm going to use that from now on.
Feel free.
Can we also just point out they boosted their share buyback by $500 million.
They did, and they're really just doubling down on a lot of earnings. They're building on their investing and credit card offerings. They have checkings and savings accounts, and they're continuing really to push beyond their meme stock days.
Okay, you said you had 2 surprises for us. Robinhood was one of them. What's the other?
eBay. So eBay projected sales for the current quarter that exceeded estimates. And to a certain extent, eBay is really kind of protected from tariffs because more than half of their sales are international. So that leaves them to be less reliant on U.S. consumers buying goods made in China. So that's actually, I didn't realize that. But then I thought that, okay, actually, I don't really know people here who use eBay.
Yeah.
Carol just uses it to buy her collector's items.
I don't use it.
No, I just say that. That's my thing.
It's up 10% in the regular trade, but you're right.
The stock has gained 10% this year, but
Yeah.
little change in extended trading. We'll see the price action tomorrow.
Maybe we could sell some of the books on your desk on eBay.
All right.
Maybe you use eBay too.
Oh my gosh, it's so tough. All right, we're going to leave it there. Bloomberg cross-asset reporter Isabel Lee. For more conversations, check out our new Stock Movers podcast, Winners, Losers. Find it on Apple, Spotify, or anywhere you get your podcasts. To the White House we go, and Donald Trump.
100 days of any administration in American history. We're thrilled to welcome to the White House dozens of the world top leaders of all kinds, but in particular business leaders. And since the election, the companies represented in this room have collectively announced more than $2 trillion in new investments, and we have a total of close to $8 trillion all told. And there's never been anything like that in this country. We've never had anything close. I would say if you looked at the last administration, probably for 4 years they did maybe less than one. And we've done almost 8. I would say we'll be above 8 in a period of 2 months. So something happened. I think two things happened. November 5th happened, and November 5th gave you tariffs, intelligently used tariffs and various other forms of incentive. But it's really amazing. There's never been, I don't think there's ever been anything like this anywhere in the world. Together, we're going to bring back the most beautiful words. I always say made in the USA, the most beautiful words. We're going to have made in the USA like we haven't had before in a long time. In addition to the business leaders whose companies I will mention in just a moment, we have some great people, great senators. Marcia, where are you? Where are you, Martha? Marcia, thank you very much. Marcia Blackburn, Bill Cassidy. Bill, thank you, Bill. Ashley Moody. Ashley, thank you. And John Husted. John, thank you very much. And Representatives Byron Donalds, Buddy Carter, Rob Whitman, Mark Alford, Mike Rogers, Richard Hudson, and Abe Hamadeh. Thank you all very much. We have Mike Kehoe, governors, Jim Pillen, Kevin Stitt, Mike Dunleavy, along with numerous other members of my cabinet, and I want to thank you all for being here. How come my cabinet has such good locations? You should have given them up to the business leaders. We want their money, you know. They have very good locations. I'm not surprised. 100 days ago,